Check, check. Morning, everyone. We will start in about 5 minutes time. Just need a few setting up to do. We're just waiting for the coordinator and then we'll start, okay? Morning, everyone. Shall we shall we start? Okay, so at the outset, let me give you an outline of what we are planning to do for the class. So we are covering both economic survey as well as the key areas of budget in this 3-hour session. So it's going to be very, very crisp. We are only going to touch upon the core areas, just the bare minimum requirement that is essential for us. We are not doing a complete analysis of it. Obviously, a timeline that not just 3 hours, even 5 hours or 7 hours might not be enough for that, for doing a complete review. And that is not necessary from the exam perspective as well. So what is relevant from the exam standpoint, that's what I'm going to focus on. And whenever I talk about certain point, I'll also tell you from what perspective, is it from the mains or the prelims perspective, that the concept that I'm talking about is important. Mostly the nature is going to be like when I discuss economic survey, which is what I'm going to begin with. So economic survey is going to be predominantly main centric, and subsequently when we look at the budget document, where I'll open the government's budget document itself, I'll highlight the key areas that are relevant from the prelims perspective. Okay, that's where the prelims information is going to be predominantly. So the first half of the class, say about till 10:15 or 10:30, so around that time, 10:30 maybe, is going to be with respect to economic survey, and then we'll take a short break, and then after that we'll continue with the budget after that. So this is the plan of action for the class. Break and sollumbodhu oru sandoshama. Break, okay, yeah, we'll definitely have a break. People who are connected on YouTube, you can send across your comments. I am taking a look at it on my device, so when there is something that I need to address, I'll address it directly by looking at the chat box. So do send across. I'll be taking a look at the comments and gaps in between, and then I'll respond. Okay, so don't expect much from what is being displayed over here. What we have here is just the name of the chapter, that's all. So don't ask me later whether the PPT will be shared. I can share the PPT, I'm happy to, with only title inside it. So I will be also dictating points to you with respect to, from each chapter, say 3 to 5 points which are of relevance. Just be ready to make a note of them. With respect to budget also, the same thing is what I'm going to be doing. If I display it on the PPT, the only thing you will be doing is copying it down or sitting and relaxing thinking that okay, anyway the PPT will be shared. So I'm not, it's a conscious decision to not do that. Okay, all right. So we'll start with the first chapter, State of the Indian Economy, getting back into the fast lane. If you look at the survey document itself, there is a preface that is given even before this chapter, which gives an overview of what is there in the rest of the chapters. One key word that you can pick from that 7-page document that is there is a word called as deregulation. Deregulation is the crux of all the chapters that we have. In every chapter, one way or the other, they are trying to make a link. Maybe not in every single chapter, but they are trying to create a link with deregulation. That is the essence of our economic survey of this year. How to reduce complaints difficulties, that is going to be the focus area. In most chapters, that is what we are going to create a link with as well. And going forward as well, you will find this to be the nature of government's policy measures as well. Already that is what we have been doing. Maybe about 5 or 6 years ago, the government made a phrase saying that less government, more governance. That is nothing but deregulation itself. So that has been the trend of the government openly for the last 5, 6, 7 years maybe, and it continues to be so in this survey as well, with that word being of very particular significance. So from Main's perspective, deregulation is something that you must focus on. Every sector of the economy, what are the regulatory constraints that we have, how can deregulation be done is something that we should focus on. That's what the survey has done as well. So we'll take a look at it. So starting with the state of the Indian economy, getting back into the fast lane. Why is it titled as getting back into the fast lane? Because it's just trying to convey the fact that COVID slowed down our progress, and if you have read a little bit about what happened before that, the 1 year prior to COVID was also a period where Indian economy had slowed down. Okay, so till 2018-19 period, we had very good levels of growth. There was even a question in UPSC main saying that consistently low levels of inflation and steady growth has put India in a good place to grow further. That was 2018 question if I'm not wrong. But that particular year, the year just before COVID, we had a slowdown. And that slowdown was marked by the government's response to that was to reduce the corporate tax from 30% to 22%. That was done in 2019. So those events had happened. Before we could see that entire sequence of events play out, what happened was the COVID and the pandemic induced lockdown and the overall stopping of the production activity, slowdown of the production activity, and the whole picture that you are all familiar with. Now, today when any economy is analyzed, the first analysis that they do is, have we reached the pre-pandemic levels? Not whether we have started growing at the old levels, have we first reached the pre-pandemic levels? Any parameter we take, okay, where are we compared to 2018-19 period or 19-20 period? And from there, once we reach there, we can try progressing further is what is the focus. So that is why the chapter itself is titled, Getting Back into the Fast Lane, where the growth has not been greatest, but the one good thing about the Indian economy is that even though other countries or the world itself is growing at a particular rate, India has been an exception. India has been able to grow faster than the world. But still, it is not the desired level of growth. we had certain targets to meet by 2025, 2030, which we have now pushed, saying practically it's not possible. Right now our target is by 2047, Vikshit Bharat, which is being a developed country by 2047. That is the focus. To do that, we should have real GDP growth of above 8.5% for the, on an average 8% till that period of time, which is extremely difficult, because last year our growth rate was around that 6.4 percentage was the growth, and the projected growth for the upcoming year is also going to be in the range of 6.3 to 6.8. So that shows how difficult it is to have growth of 8% on an average over that period of time. So there will be years where our growth will be lower. So there should be years where our growth is around 9 or 10% to compensate for that across that time period. So that is the essence of this. But this chapter mainly focus on what has happened, not what should be done going forward. What should be done going forward is something that the 5th chapter deals with, about medium-term growth. So we'll get to that when we get there. So this chapter says that globally, first global issue and then Indian issue. Globally, there is an overall slowdown. There was an overall slowdown because of the pandemic. The world itself has recovered. The global economy has recovered. But even across the globe, the recovery has been predominantly led by the service sector. Across the globe, it is the service sector which has been leading the growth process. However, globally, there are many new challenges that are coming up as well, which can act as barriers to this growth. One is the constant fight, one after the other. Initially, it was the trade war that Trump started when? Before COVID, with China being the center of attack at that point of time. But then COVID happened, and then Trump regime changed, someone else came about, and then it was COVID for a period of time. And after that, when COVID seemed to be easing, there was this Russia-Ukraine trouble that happened. Major countries, because one is a agricultural exporting country, agricultural product exporting country, the other is a petroleum exporting country. So both these countries are very essential for the global scenario. So that had an impact. And just when that seemed to be like going in a sort of a stalemate, the other issues started coming about with Hamas and Israel, those issues. And there are these constant issues that keep coming up one after the other. These are what we call as geopolitical tensions. And what are the geopolitical tensions going ahead? We don't know, especially with many countries of the world moving towards sort of extreme ideas. By extreme I don't mean violent ideas. Extreme ideas, I mean protectionist ideas and all those things. So trade policies are changing. While the period from, let's say, 1980s to maybe about say 5 years, till 5 years back, till before the COVID period. Okay, the focus was on globalization, more and more globalization. There was a general acceptance across the world that globalization is what is going to drive the entire world and individual countries. Now there seems to be changes that are happening everywhere. In a way, you could start by saying Brexit was a significant key point. I won't say starting point, but Brexit was a key point where the belief that being together and having a free trade among themselves is helpful. They broke that belief system and they said, no, we need to be independent. That's when our needs are taken care of. So that was a starting point. Not starting point, that was a key event that happened. And then subsequently other countries coming about and saying that we have to take care of our own requirements first, America being the key area. Now America's current actions are changing the entire dynamics, not just in economic aspects, in political aspects, in security aspects also. Till recently America was pro-Ukraine, now they are neutral. We don't know what tomorrow is going to hold. So these are the geopolitical tensions and tensions that we have, and we anticipate these kind of things going forward. We don't know what might happen. So that is an area of concern. Then trade policy is changing, as I said, from globalization to greater protectionism. So how is India going to respond? That is going to have a major impact. So these are the global issues that are of concern. With respect to India, how has India's performance been? Surprisingly exceptional performance of agriculture. Agriculture, which has already reached a peak level of growth, on an average is what we are saying, we are peak level of growth. Our target level of agricultural growth itself is around 4%. If you have 4% growth annually in agriculture, real terms, it is considered to be very good performance, because we have already reached a peak level after Green Revolution during that period of time. So that is a settled sector is what we look at. In spite of that, that sector is growing very, very well. predominantly led by this time around a very good monsoon. You know that in Tamil Nadu we had rainfall almost every month of the year, so that was there throughout as well. There are good and bad about it, but in general, in India it worked favorably to us. Very good production, so that is something that worked out in our favor. Agriculture was a big positive for us. Okay. Then service sector, as always, has been very good. Even during COVID, service sector was not hugely affected because it quickly adapted and found ways, work from home and all those non-contact services were able to deal with the disruptions caused by it. We did have good recovery. So services continues to be the bright spot. Manufacturing hasn't been quite so, mainly because of a drop in global demand. Global issues have resulted in there being a drop in demand globally, and as a result, India's manufacturing sector is also something that's been suffering. Okay, so this is with respect to India scenario. Mainly in India's case, the growth has been driven by consumption, where a lot consumption, if you remember when we learn in class, if you have attended my class, we learn the circular flow of income and we divide the income into 60% towards consumption, 30% towards savings and investment, 10% towards taxation and government expenditure. That 60, the number we take is because that is roughly the number that we have with respect to consumption. Private consumption is around 60% of people's income they spend on consumption. Of late, that number has been increasing and it has become 61.3, close to that 61.5%. Although it might look like just 1.5 percentage point improvement, it is substantial when it comes to the nation's economy itself. So that's a huge change that is happening, which is showing that domestic demand itself is quite high. That consumption increase has resulted in India's economy also progressing. This consumption, interestingly, has been driven by rural consumption increase. Rural consumption, why? Because again we connected with the agriculture, right? Agriculture improved productivity meant that farmers are consuming more of the raw materials required and they're generating higher levels of income than in the past, so they are consuming more and more. So rural consumption has been a very bright spot as well. So these are the key areas from it. Make a note of few points that are of significance here. First, global issues. We have supply chain disruption. You can sit here. Do you have space there? You can, or otherwise we have space here. Okay. Then we have weak demand as an issue globally. Global issues is what I'm saying. Supply chain disruption, weak demand. Geopolitical tensions and trade policy risks. Trade policy risks. Okay. Any point that I narrate, if you are not able to comprehend it, you can ask me then and there. I'll answer it, clarify it as well. Okay. So that is the global scenario. Indian scenario. I'm not talking about Indian challenges, I'm talking about the Indian scenario. First, what I wrote is global issues. This is Indian scenario. We have had steady growth, 6.4% of GDP. Agri and services have done very well. Good progress in agriculture and services. Improvement in rural demand. These are the bright spots for India. What is the way ahead for India? What is the way ahead? Improve global competitiveness. Improve global competitiveness. Through grassroots level structural reforms. Through grassroots level structural reforms. and what is that one word? Deregulation. So that's the first chapter. Moving to the second chapter. There are a total of 13 chapters, so this is quite a lot. Monetary and financial sector developments. The cart and the horse. Alright, so what is the cart, what is the horse here? Cart is the Indian economy which is getting pulled, and the horse is the monetary and the financial sector, which is key to the progress of the economy itself. So that is the relevance of the title. The overall analysis that is done here is that the financial sector, monetary and financial sector is doing very, very well. Okay, in India is doing very, very well, which is a matter of great relief. Okay, so I'll tell you the points in the end. So I'm just explaining the things to you, like with the first chapter. So I'll tell you the points at the end. So Indian financial sector is, for many people, surprisingly, including me, because the general analysis that was done during the COVID time was that once the COVID is over, one of the biggest challenges that India is going to face is with respect to the financial sector. Okay, why so? Is because we were already grappling with an issue of very high levels of non-performing assets even before COVID. That was the biggest issue in India. Every day in the news there would be some news about NPAs, bank in crisis, and RBI doing something, or the government doing something, or the industry asking for something. There used to be issues like twin balance sheet syndrome, then it became 4 balance sheet syndrome, exit challenge, which economic survey itself in the past has very interestingly named as the CHAKRA challenge, and all those things. And there were quite a few reform measures that were brought in as well. We know about the insolvency and bankruptcy code, we know about the National Asset Reconstruction Company Limited. All these have been brought about as well. But when COVID happened, and with the NPAs being quite high even at that point of time, even in 2018-19, that was one of the major issues that India was facing. Everyone thought, now people are not using their money, so all their money is in the banking system, and the banks have to keep paying interest on that. And the banks, they would give loan to businesses, but there is no business activity happening during COVID. Plus, those who had already taken loan also, the court and the government granted moratorium, saying that you don't need to pay interest during that period of time, or repayment of principal or payment of interest is not necessary. And the banks had asked for, saying that okay, later they can pay later, but they should pay the dues as well. That also was not allowed, saying that whatever was a moratorium during that period, there will be no interest calculation at all. But the banks still had to pay interest on all their deposits during that time. So the general anticipation was the banking sector would be in big time trouble unless the central bank does something or the government does something to protect it and all this. But none of that was explicitly necessary. Why do I say the sector is doing really well now? Because NPAs in the banking system is at an all-time low. The number that they give is it's a 12-year low. 12 years means 2013 is when, compared to post 2013, this is the lowest it has been. The significance of this 2013 timeline is that till 2013 is when we had, if you are familiar with the concept of evergreening of loans that the banking system in India was doing. So what they were doing was that there were quite a lot of NPAs as a result of the global financial crisis, but the banks were sort of hiding these NPAs by giving a new loan to the same entity to prevent this loan from becoming an NPA. So giving a second loan to hide the first loan becoming an NPA. So the banks were doing it, and there was nothing illegal about it at that point of time. The rules did not prevent this from happening, but this was clearly manipulation. In 2014, when the RBI conducted a review, is when they realized that this is what is happening. They conducted an asset quality review. That's when they realized that all these were happening. And then the RBI said, no, you cannot do that. You have to reclassify all of them as NPAs. Suddenly, there was a rise in NPA. Okay, so till 2013, when we say it's a 12-year low also, the till 2013 period that we talk about is a period where NPA was there but hidden. So in a way, now when we say that we are at a 12-year low, it's actually more than 12 years. Numerically we can say 12-year, but we can say it is as low as probably before the crisis that we had, global financial crisis period. That's not explicitly stated anywhere, but that's the interpretation that we can make out of it. So this is exceptionally good performance on the part of the bank. The fact that they have very, very low levels of NPA. Plus, we look around everywhere around us, we will notice that people are talking more and more about investments in the share market, mutual funds. Advertisements are all about mutual funds. Almost on a daily basis or every alternate day basis, we hear about IPO. You know IPO, right? Initial public offering, new companies are selling their shares and generating money. So financial markets are growing, capital market particularly is growing. So this is something that's constantly there in the news. Plus we are hearing more and more about NBFCs, non-banking entities. Today you go to buy a vehicle or ask for a car loan, as much as there is a bank presence, there is also an NBFC presence that is there. So that is also growing in significance that is there. So overall, now where can I get credit from? The areas are improving. What can I do with my money? The areas are improving. Which means from a business standpoint, where can they access money from? What can they do with their money? All this is improving. This is why the financial sector in general is considered to be doing very well. But there are certain risks in the financial sector as well. The main risks are with respect to the banking sector. How are we getting rid of NPAs? So there is a concept that again you might be familiar with, you have mentioned in class, called as haircut. Okay, the foregone debt. What percentage of the loan is the bank able to recover when they are finally saying, okay, NPA is resolved? The bank might have given, there are some cases where the bank has given a loan of 100 crore and it recovers only 5 crore or sometimes even less than that, and then say that is the best that is possible. And this is legally monitored. That is where your insolvency and bankruptcy code comes into the picture, right? There is a national company law tribunal or a debt recovery tribunal which is there, which is monitoring this process, and they are saying that this is the best resolution that is possible. Now, which means we are giving haircuts or foregoing of loans of close to 95 to 98% in some cases. On an average, the debt foregone itself is in very high, 70%. There has been in many cases that have been resolved. So the question is, yes, NPAs are low because once you write off an asset, it is not an NPA anymore. The NPA is low, but what about the profitability? What about the banks? Aren't the banks suffering? That is again another interest. This is a risk that is there, but on the other side, the account books or banks are showing that they are having good profits as well. Okay, if this is true, and that is what the data says, that in spite of the way that we are resolving the NPAs, banks are still profitable, then it once again goes to show that we should allow banks the freedom, or these kind of regulatory entities the freedom to deal with these kind of issues on their own. If you are a regulator, would you be okay with giving up 95% of loans? No, you would not be okay with that. Doesn't seem like a logical at all. But in spite of doing that, if the bank is profitable and the NPA issue is resolved, don't you sit and think, okay, then what is the problem then? So bank is the one which is standing to lose by giving up on that loan. If they are profitable, it means what? Every money that is deposited, they are able to repay to the depositor. They are themselves able to make a profit in spite of giving up on so much of the loans that they have given, which means from other areas they are very, very profitable wherever they are able to recover properly. Knowing this, don't you think if you were a regulator, you would say, okay, then let it be, because it's overall working out for the economy. It's not necessary that every loan has to be resolved perfectly. So this once again fits into that one word that we are talking about, deregulation. Why? Because if you want to regulate every single activity and you say everything has to happen according to what is ideal, it may not work out in an economy. There are certain losses that we have to suffer. There are certain risks that we have to take. So the regulators should take one step back and see what is overall good for the economy. Rather than being microscopic with respect to their approach, take a broader view. That is again the focus of deregulation that is there. One more risk that financial sector talks about is a concept called as financialization, which means excessive participation in the financial market. Okay, so you know that the general economy can be divided into two sectors: real sector and financial sector. Real economic activities and financial activities. Real economic activities are those which result in actual production. I'm not saying actual production, I don't mean goods. I mean goods and services, but which are actually providing satisfaction to the people. For example, education is a service, it's intangible, but it is a real economic activity because there is knowledge transfer that is happening. Healthcare is a real economic activity. Production of agriculture, agricultural products, manufacturing, all these are real activities. Lending is also an economic activity, but lending is not a real economic activity, it's a financial economic activity. Why so? Because you take a loan, I'm a bank, I give you a loan, that's an economic activity. But that itself is not the end result. You are taking a loan so that you can go and do something else with it. Okay. Now, if there is too much focus on making money by doing financial activities rather than real economic activities, people might make short-term gains, but in the long term, there won't be production that is happening in the economy. This is a challenge that is there. Today, rather than people focusing on making money by doing actual business, people are more focused on making money by, let me just sit at home and invest in the share market, and I'll make money out of it. So that is a thought process that some people get into, which means they are not actually contributing to any real production in the economy, which is a risk that we are envisioning. The other risk that comes with it is that financial market itself is highly unstable. It's volatile in nature. So if too much of the economy focus on the financial instruments, there might be a possibility that when business cycles take place, cycle means there is a downward fall also. These large chunk of people who are invested in the share market might actually face the volatility and they might experience that crisis itself. So this is something that we have to guard against. That is the crux of this. Please make a note. So I'm categorizing into how good performance and areas of concern. First, good performance. Good growth in bank credit. Good or steady growth in bank credit. Just an additional point here. During the period till about a couple of years ago, the deposits were growing at a very high rate, but the loans were not growing at the same rate. Now there is a convergence of lending growth rate, credit growth rate to the deposit growth rate. Both are growing at similar levels, which is actually a good sign that money is not coming and stagnating in the banking system. It is coming in, it's going out as well. So that's a good sign. So steady growth rate in bank credit and convergence to deposit growth. Convergence to deposit growth. Second point is improvement in profitability of banks. Third, a fall in NPAs and a rise in CRAR. Fall in NPA and rise in CRAR. We know what NPA is, non-performing asset. What is CRAR? Capital to risk-weighted assets ratio, also called as capital adequacy ratio, CAR. The same concept. CRAR or CAR. Then next point is financial inclusion index has improved. Who publishes financial inclusion index? RBI. So financial inclusion index in India has improved. Strong capital market performance. Particularly bond market and equity based financing. Particularly bond and equity based financing. And finally, rise in NBFCs. Rise in NBFCs, non-banking financial companies. Some areas of concern are rise in consumer debt. Who will borrow other than consumer? Producers should borrow, no? Producers debt rising is a good thing because more production would happen. Consumer debt means what's already been produced is consumed through borrowing. Okay, so rise in consumer debt is a bit of a concern, not entirely a negative thing. It shows good consumption pattern, but the next point that I say will align with it. A lot of times these consumer debts are without any mortgage. So expansion of unsecured debt. That's the second concern. Expansion of unsecured debt. What is meant by unsecured debt? No mortgage, no backup. Credit card debt is an example of unsecured debt. You will get a credit card provided you have a certain income certificate or certain credit score, but there is no actual security provided for it. So if you default on it, there is no possibility of actual recovery, or it will be very difficult. So that is a concern, expansion of unsecured debt. Then third is growing number of young investors. It's both a positive as well as an area of concern. Growing number of young investors. It's not a negative, it's an area of concern, that's all. We need to be watchful about it. And finally, excessive financialization. So this is something, so rest of the points, excessive financialization. So the rest of the points I would say is important from mains perspective. This phrase or this word financialization might be relevant from prelims. Which of the following statements best describes the concept of financialization is something that is a possibility, just as an example. Okay, so just try to, I've already explained it to you, just try to remember it closer to the examination, financialization. Okay, so that is this chapter. Third, external sector, getting FDI right. Okay. So what is the area of focus here? Once again, protectionism. We discussed that in the first chapter itself. That's an area of concern. The growing protectionism is preventing trade from happening freely. We were going more and more into free trade. Now we are moving farther and farther away from free trade with the passage of time. So that is an area of concern. Another area of concern that we have with respect to our external sector is FPI. Heavy outflow of FPI that is happening off late, where the RBI is having to even intervene in the market. So that is an area of concern that we have. With respect to FDI also, there is growth, but the growth is not as much as it used to be in a previous period of time, let's say a few years back. So there was a slowdown in the growth of foreign direct investment itself. Okay, so quite a lot of withdrawals from India and all those things. So that is an area of concern. In addition, how to make India's exports. So here the focus is on FDI, but in external sector overall, how to make India's exports more competitive and resilient to the global aspects. So these are the focus areas of discussion. Once again, the focus is on that one word, deregulation. Ease of doing business is nothing but deregulation itself. Allowing exports, more and more of exports, granting export licenses with more ease. Then setting up of special economic zones, export-led areas. These are the areas that building export-related infrastructure. This is what is the focus area of this chapter. Okay, quite a brief chapter. So there is also a final discussion about the relevance of tariffs. We have been told throughout that tariffs are good or bad. Tariffs are good. The current world seems to think that tariffs are good, but till some time back, the general feeling was that tariffs are bad. Any country which imposed tariff was looked upon negatively. India used to impose, and India continues to impose quite a lot of tariffs, but everywhere the discussion took place, it was spoken about as a negative thing. India, the tariffs that India imposed and some other countries imposed was globally pictured as like a villainous activity that India was doing, that we are giving tariffs, that we are imposing tariffs. Today that perspective is changing. Now evolving, but in future that might go further in that direction. Now there is a greater feeling that okay, tariffs are necessary, every country needs to protect their own, which is where we are moving from globalization to greater protectionism. That's something that's happening. So there is an analysis about how relevant are tariffs, and it turns out that all of today's developed countries in their initial stages, they did very, very extreme forms of and targeted types of protectionism in terms of having tariffs. Once they grew and they became a big country, they started promoting a free trade. Everyone should get involved in free trade. Now that things are not working out for them, once again they are saying no, protectionism, tariffs are very, very important. So this is the change. So historically we have had tariffs being used as a very strategic tool for improving a particular country's performance. So tariffs are crucial, but depending on what type of tariffs that we impose. So that is very, very crucial. There is a discussion about that as well. So we'll make a note. India's performance is what we are focusing on. India's performance, resilient. India has been resilient amid global headwinds. What is meant by a headwind? Think literally, you are walking, there is a headwind means something which is pushing you back, something which is an opposing force. That is what is meant by a headwind. Okay. So among global headwinds, what are the headwinds that we are facing globally? Tariff, geopolitical tensions, the same thing that we have discussed previously itself. Okay, trade policy uncertainties, greater protectionism. What is the global headwinds? With respect to trade specifically, India's biggest challenge is trade related costs. Our cost of trading. First of all, cost of producing commodities. Second, logistics costs are quite high. Storage, logistics, transportation, these costs are quite high. And it is not an area in which India is doing specializing, the logistics aspect. So that is a concern. So reduce trade related costs. And enhance export facilitation. Enhance export facilitation, reduce trade related costs and enhance export facilitation. So that is with respect to trade. With respect to remittances, India has shown very strong receipt of remittances. Okay. Very strong receipt of remittances. With respect to investments next. FDI, correct, FDI. So FDI has shown growth but not as much as in the past. So you can call it as showing signs of revival. That's why the chapter itself is titled Getting FDI Right. This is very crucial for the country. Okay. Showing signs of revival. With respect to FPI, foreign portfolio investment, there is uncertainty and there is quite a lot of capital flight. So there is uncertainty, there is capital flight. But there is also a claim of profit taking that is associated. Profit taking. I will explain these points. Now, we know as a fact that there has been an excessive outflow of foreign investments, portfolio investments from the share market. The question is why so? There are different reasons for it. There are three main reasons that are given, all of which I have mentioned here. One is internationally there is, other countries have raised their central bank rates. So those countries, their home countries or other developing countries have become more attractive investment destinations. India has raised its repo rate and kept it at 6.5% for quite a long period of time. But we could not raise our repo rate any further. Why is raising repo rate something that attracts investment is because repo rate is what is the benchmark for all other interest rates in the economy. When repo rate is high, all other interest rates would also be high. So anyone who brings investment here is likely to make greater gains out of that. They are lending money, let's assume they are going to get greater returns. And we know as a general fact that developing countries will have lower rates. Developed countries will have lower rates and developing countries will have higher rates. If in India the benchmark rate is around 6.5, repo rate is 6.5, the similar rate in a European country, a developed European country or USA would be about maybe 2% or maybe 3%. That's what the rate is going to be. So an investor is thinking that is not profitable, this is profitable. But during this period of high inflation throughout the world, other countries have also raised their rates. So India is not as attractive a destination anymore. So they are leaving. So this is one reason why they are leaving. Second is the general uncertainty because of the geopolitical tensions that is happening. So they feel leaving the money in developing countries can be risky. Not just in India, in general in developing countries, it could be risky because now the developed countries which were previously not acting or doing protectionist policies, they are now doing that, means that there might be a possibility of losing money by keeping the money in developing countries itself. That is another uncertainty that is coming along with it. And another point which our finance minister also very recently mentioned, and it was already there in the economic survey, is that she used the term that the companies are booking their profits. That's the phrase that she used, which is what is given in the economic survey as profit taking. Okay, so let's say you have invested 1,000 rupees in a share. Okay, let's say the share is doing really well and the value of the share is now risen to 1,800 rupees. You invested only 1,000, it's 1,800. How much is your gain? No, that is your potential gain. That's not your actual gain. You are not made any gain. When do you realize the gain? When you sell the share at 1,800 and get the 1,800, then you say, okay, I had 1,000, now I have 1,800. Only when you sell the share will you actually get the money in your hand. That's when you realize your gain. This is what is called as booking the profit or profit taking. Okay, so because Indian economy is doing so well in comparison to other economies of the world, there is a lot of profit to be had here. The excessive FPA outflow is nothing but a reflection of the fact that India is doing very good, India's companies are doing well, and they are realizing the profits from India. They are saying, before this profit falls, let me sell the shares and take the profit and go away, which is inevitable in any country which is doing well. Because when you're doing well, obviously people will try to monetize it. People won't just say, oh, conceptually I have that. You have a land which is worth crores, but as long as it is in the form of land, it's not a crore in your hand. Okay, so when you feel that, okay, this is the maximum it can reach, you will try to sell and monetize it. That is what is happening, and it is not a long-term worry. So attracted by this profit making, these very same investors will come back to India is what is the government's argument. But it's uncertain because of the global scenario that is there. That is the uncertainty part and the profit taking part that is there with respect to FPA. Forex reserves, next heading is investment. I said Forex reserves. We have around $640 billion US dollars worth, 640 billion US dollars worth of Forex reserves. All this data that I am saying is as of December 2024, not the present one. That's what the economic survey restricts itself to. It had crossed 700, but because of this FPA outflows, what RBI had to do was to prevent the excessive depreciation. Now what is happening? FPA outflow means foreign investors are saying, give me back my dollar, I am taking it back. So there is high demand for dollar. When there is excessive demand for dollar, the domestic currency would depreciate. So $1 is equal to 80 would become 85, 87, 90, 95. To prevent this from materializing, what RBI did was they took dollars from their reserves and supplied it into the market, which is something that RBI usually doesn't do. Because liberalization and staying away, regulators staying away means this shouldn't be done. But the very reason why they keep the reserves is that in extreme cases, like in this case, our currency would have been now worth 95 or now $1 would have been worth 95 or 100 if the RBI had not intervened. So they intervened to ensure that the exchange rate doesn't depreciate too much. And that is the reason why Forex reserves have depleted as well. Okay, but in spite of this depleted Forex reserves, this is enough to cover 11 months worth of exports. This is what is called as import cover. How many months worth of imports do we do we have for paying for imports? We have the 640 billion US dollars is enough to pay for 11 months worth of imports. So that's import cover. Import cover means how much money do you have or how much months worth of imports worth of money do you have in your reserves? So that is one, what the 640 billion US dollars is worth. That's one. Second, it is equal to 90% of our external debt. Whose external debt? India's or Government of India's? You're talking about external sector. India's overall, external commercial borrowings, all of it put together. Okay. So if we had to repay all our external debt today itself, we'll still be able to do, and we'll still be left over with some money, but we don't have to, because a lot of these debts are long-term loans. So which we don't have to pay immediately. They cannot come and ask us to pay immediately also, because the terms of understanding itself is that we need to pay over a longer period of time. There is another proportion called as short-term debt to forex reserves. How much is the short-term debt as a proportion of forex reserves? That's only around 20 to 25%. Okay, the exact number it is mentioned in another budget document. I'll show you when I show that. So that's 20 to 25% in that range. So the immediate payment obligation is only 20 to 25% of our forex reserves, which is again a very comfortable position that we are in. And finally, write about the tariffs that is there in the point as well. So our analysis of the various sectors is done. Just a key point about tariffs. This is again from a mains perspective. Historically, a very prominent tool, tariffs. Historically, a very prominent tool for industrialization and growth. Historically, a very prominent tool for industrialization and growth. However, we have to ensure that the protected industries perform. We have to ensure that the protected industries perform. Otherwise, what will happen? What happened in India till 1990? Our industries would feel protected, but they wouldn't grow. They'll remain where they are. They'll be their inefficient version of the industries. That is what we tried from 1950 to 1990 by providing protection to them and all those things. But it did not happen because we did not create the sufficient circumstances for these industries to grow. Okay. So that is something that we have to care, ensuring protected industries perform. So there's a question from online. Okay, before that, from Shimla, I think it's Abhimanyu is asking me to repeat which part exactly about tariffs, I assume. So historically, a prominent tool for industrialization and growth, but we have to ensure the protected industries perform. I think there's a bit of a lag between what I'm talking and what is on YouTube, because I'm still talking on YouTube after I finished here. Okay. And then there is a question that Sriram has asked, would an imposing tariff lead to inflation? Would imposing tariff lead to inflation? It would, right? On the imported commodity. Is it good or bad? That is our whole intention, right? To make the imported product expensive so that we don't buy that. People don't buy that. So that they go for local commodities. So it is a wrong idea to impose tariff on essential commodities. That is the whole point of this. We have to be targeted with respect to imports. Whatever we are producing, they are also producing at cheaper rates. To prevent those from coming in, we impose tariffs on that. So creating inflation is the way by which we are preventing those commodities from being consumed itself. Okay. Moving on to chapter 4. Price and inflation, understanding the dynamics. All right. So globally, inflation peaked in 2022 but subsequently has reduced. In India also inflation peaked in 2022 and has subsequently reduced. Currently inflation is less than 5%, 4.4% or something is what the inflation is, and we are, no, 4.4 is the target. I think it's 4.8 right now. Upcoming year we are expecting it to be 4.4. Okay, so this is with respect to global and Indian scenario. When we take the Indian scenario particularly, what we notice is that the headline inflation is what is 4.4 or 4.8% that is there. Within that, the core inflation is very, very low. It is in control. So what is causing this higher level of inflation is food and fuel, but particularly food. Food inflation is what is causing this. Does the monetary policy have any major impact on food inflation, on controlling food inflation? No, those are supply side challenges, right? So it is supply side bottlenecks that we are facing, monsoon issues that might be there, but delays in monsoon might have been an issue, or excessive rainfall is an issue, not delayed rainfall is an issue. These are the various issues, plus there are global issues that are going on, and oil prices also having an impact on the food prices, because oil is a raw material for many activities, even fertilizer production, or even in the other production activities, oil and petroleum, these are very important raw materials. So that has played a role. Okay. Particularly with respect to onion and tomato, we know the top commodities, right? Tomato, onion and potato. Particularly onion and not potato, onion and tomato, there has been a decline in production. That has led to a rise in prices that is there. Then pulses also has seen a rise in price, mainly because what we are producing is not sufficient for our own consumption. India is one of the leading producers of pulses, but India's consumption of pulses is even more than that, which means our production is not sufficient to meet with our own consumption. So we are having to import, and that has an impact on raising the prices of commodities that is there. So these are the issues that are there. Some administrative measures have been taken, which has brought down the food inflation also to some extent. Again, none of the measures that are taken are given in the survey are from RBI actions. They are all government actions that are there. Maintaining buffer stock and bringing the buffer stocks into supply, giving discounted retail sale of commodities. These are certain things. You might have heard of this concept called as price stabilization fund. So they keep a fund so that during excess times they purchase and keep buffer stock, and later during times when there is a short supply, this stock of commodities would come into the market. So the fund kept aside for buying these stock is called as price stabilization fund. Okay, so that's been there. So these are the measures, plus easing imports. Certain commodities, when we are in short supply, the government allowed duty-free imports of those commodities. So these are the measures that the government has taken as well. There are some long-term measures that the government should be taking going forward as well, which is focusing more on pulses production and focusing less on cereal production. There is in general an overproduction in cereals and an underproduction in pulses. So that is something that we should be addressing. Plus climate resilience in agriculture. Having more climate resilient crops and investing in those will ensure that in the long run food inflation would not be as much of a concern, because climate variability is almost a given. Whatever some of the developed countries of today or their administrators may say about climate change, it is something that actually has an impact on India, and we are going to face climate variabilities going forward as well. So there is no way for us except to make our crops climate resilient. That's the way to go ahead as well. So that is the crux of this chapter. Make a note. First, global inflation peaked in 2022. Declined subsequently due to policy interventions. India's inflation has again eased, particularly retail inflation has eased. What is retail inflation? Correct. Inflation measured by which index? CPI or WPI? CPI. Retail means consumer, Wholesale, retail. Retail is consumer. CPI is what is retail. So retail inflation has eased, and we know our policy target itself is to meet CPI target of 4. CPI inflation of 4 plus or minus 2. So retail inflation has eased. Core inflation is at a decadal low. Core inflation is at a decadal low. This is the lowest it's been in a decade. But food inflation has been high due to supply chain disruptions and adverse weather. See, this phrase supply chain disruption is something that you can use anywhere when there is a general slowdown, because supply chain disruption is a broad heading which can cover anything. Transportation issues, non-availability of raw material, regulatory issues, storage issues, everything is supply chain. Okay, supply chain disruptions and adverse weather. Onion and tomato, particularly, there was a decline in production, which was countered by buffer stock. So onion and tomato, there was a decline in production, but countered by buffer stock. With pulses, we are a major producer, but demand is greater. Measures that we have taken. One is subsidized retail sale. Then easing imports. What is the long-term solution? That's the next one. Long-term solution. Having robust data systems to monitor prices. Having robust data systems to monitor prices. Second, develop climate resilient crops. Develop climate resilient crops. And third, reduce crop damage and post-harvest losses. All right. Okay, so that's chapter 4. Chapter 5. Medium term outlook, deregulation drives growth. So this is the chapter where entire focus is on that. What are the various areas where this has to be done? So how to have a sustained growth? The answer is there in the title itself, deregulate. What sort of deregulation are we talking about, and what do we mean by this? So we have to ensure that in the global scenario, once again we connect it to that, in the global scenario where there is rising protectionism, we have to drive a growth which is self-reliant. So something that we discussed during the government initiated during the COVID period itself, Atmanirbharta is something that we discussed, self-reliance. So self-reliance is a must. So we say that yes, global growth is slowing down, global disruptions are there, but we should be making ourselves capable of dealing with our own troubles on our own or preventing us from getting into trouble. So self-reliance is of utmost significance over here. So to become self-reliant, the key that they have mentioned here is provide freedom to the people, freedom from strict laws. That is what is deregulation. Freedom from constraints to go about their economic activities. Give economic freedom to the people. Give financial freedom to the people. One of the aspects mentioned here is leave more money in people's hand, which is something that we have done in the budget as well with income tax relief that is provided. So this is the kind of deregulation. There are many aspects of deregulation that is focused on. Deregulation in terms of taxation, deregulations in terms of approvals that are required for businesses. So various aspects that are there, with a special focus on deregulating micro, small and medium enterprises. Why is that the focus area? Is because a company grows to become big. What tends to happen is they'll try to maximize their profits, and to maximize their profits they look at it as, let me reduce my labor and move more towards machine led growth, because that's what we call as capital intensive growth. So the companies, obviously the bigger companies would move towards more capital intensive growth. They'll invest in technology and all those, but in the long run that's what is the path that they are going to take. Okay, so by providing facilities to them, we are not going to generate a lot of employment. In India there is still a lot of employment potential that is there, demographic potential that we talk about, and to reap the demographic dividends. So it is by encouraging the micro, small and medium enterprises that we can actually ensure that more and more employment is there, more income goes into the hands of the people. So deregulate the micro, small and medium enterprises. In fact, in the budget, when we look at the budget, we'll actually see a measure that the government has done. They have revised the limits of categorization of what is micro, small and medium enterprises as well. It was last revised only about 5 years ago, but in a very short span of time we have done a revision of that guideline as well, to ensure that more and more industries come under the benefits that are provided by micro, small and medium enterprises. So these are the key areas of discussion in this chapter, plus a special mention given to states playing a very crucial role in this deregulation process. Okay, individual states, every state has to learn from another state or from international best practices, because a lot of the grassroots level activity, we mentioned it in the first chapter itself. What was our takeaway? We had mentioned improve global competitiveness through grassroots level structural reforms and deregulation. So the grassroots level refers to at the state level or even at the third tier of governance that is there, bring about deregulations to ensure that businesses happen without much of a constraint. So state level deregulation is something that the survey focus on, but that is not something that the center can itself implement. Okay, that is up to the states to learn from each other or to learn from international practices and to apply it. So this is the crux of this chapter. Please make a note. So we are in changing times. So self-reliance is key. We are in changing times. So self-reliance is key. What is a changing time? From globalization to protectionism. Okay, more and more protectionism. That is a changing time. So self-reliance is key. Greater emphasis on domestic growth. Which necessitates giving up on excessive regulatory compliance. Which necessitates giving up of excessive regulatory compliance. The same deregulation which is given in different forms, still the same thing that they are conveying. Then enhance economic freedom for individuals and small businesses. Enhance economic freedom for individuals and small businesses. Bring about state level factor market deregulation. Bring about state level factor market deregulation? What is meant by factor market? Land, labor, capital management. So the market for land, which is the labor market, okay, the market for money, which the center doesn't necessarily do, but the state doesn't necessarily govern, but access to capital is something that the state can play a role in as well. Okay, so that is what is meant by factor market deregulation. Then your land approvals and all this is given by the state, no? So providing approvals much easier. That is again part of factor market deregulation. There is a phrase, there is a word that is given here which is very interesting. They say systemic deregulation is the key for middle stand growth. Systemic deregulation. What is meant by systemic? Systemic means widespread, across. So a systemic issue means something that affects the entire nation. Okay, systemic deregulation means across the board, wide areas of deregulation, not just in one particular area, not just in labor, in the entire aspect of business, do deregulation. So that's what is the meaning of the word systemic. Systemic deregulation is the key for middle stand growth, MITTEL STAND. Middle stand growth. What is meant by middle stand? It's actually a German word. It doesn't have a direct English translation per se, but it refers to MSMEs, where middle is middle level. Okay, micro, small, medium is what we refer to, right? And you might have read about it, but Germany is a perfect example for how MSME driven growth can take a country to higher levels. While India focused on, in the second 5-year plan and in that immediate period, setting up giant industries and ensuring or hoping that trickle down effect will ensure smaller industries will develop. Germany, so that is a top down approach. Germany took the bottom up approach, where they said we'll develop small industries, they will ensure that they'll grow into bigger industries. Okay, so Germany is an example for that. Japan is quoted as an example for that. So that is this phrase. Middle stand is something that is used as a word to refer to MSMEs. Okay, again, I'm not sure how likely that UPSCs are going to test you on a German word, but if it is used somewhere, you should be familiar with this because the economic survey has used it. So just be aware of it. Okay, there is a little bit of mention on butterfly effect as well. Why butterfly effect is because when you deregulate one small area, it is not only in that area alone that we are going to see the positive effect of it. The positive impact of it can be widespread. So they have used the example of butterfly effect to show this. A small change that we make today is going to have a large impact on the overall growth of the nation itself. Okay, that is the chapter 5. Moving to chapter 6, investment and infrastructure, keeping it going. There's actually quite a lot, so I'll directly go into the points and then I'll explain along with it because conceptually there isn't a lot to explain. So make a note. First, infrastructure itself is classified into physical, digital, and social. What comes under physical? Railways, roadways, civil aviation, ports and shipping, even the power sector. Railways, roadways, civil aviation, ports and shipping, power sector. these are what come under physical infrastructure. But specifically these are especially railways, roadways, civil aviation, ports and shipping are what provide physical connectivity. So that's a subheading inside physical infrastructure itself, something which provides physical connectivity. Okay. Then you have digital connectivity, which is provided by telecommunications and IT. Telecommunications and IT. Then under the heading social infrastructure, what we have is rural and urban infrastructure, specifically infrastructure with respect to drinking water, healthcare, education. So access to schools, hospitals, clean drinking water, sanitation facilities. While all of these will come under the broad heading of physical, since it's particularly focused on the social improvement, we categorized under social infrastructure. The survey also focused on a couple of other areas, building tourism infrastructure, because that is an area that we should be focusing on going forward, is something that's mentioned, and space infrastructure. What is the way ahead for us? So integrated multimodal transportation, integrating multiple modes of transportation, multimodal, where you have integration between railways, roadways, water connectivity and all those things. So integrating multimodal transport and modernization of existing assets. A key phrase that is used here is last mile connectivity, to enhance last mile connectivity. Think of a practical issue that we have even today in let's say Chennai. You have metro rail, but there are many parts where you get down from the metro rail, you don't know what to do next. There is no bus connectivity there, there is no auto connectivity there. Some areas it is there, some areas it is still not there. That is last mile connectivity missing. So because that is not there, you will say, okay, if I'm getting down there, then metro is not a viable option. Okay, so that is where multimodal transportation and integration between them, which is why it's not just about presence. If you get down from a metro rail, there is on the road other vehicles are going, but is it particularly linked with the one mode of transportation that is there, which is why integrating multimodal transportation and modernization of existing assets. Again, we can take a Chennai example here. Those who are familiar with it, you know the MRTS, the flying rail that we have, what is called as a Parakkum rail that we have over here. There has been a discussion going on for a while about metro rail taking over that, and I think they have negotiated it, and metro is taking over that. So that will ensure that the existing infrastructure itself is much more refined and modernized. So that will mean that it will be on par. Even the railway station there, a lot of times it is, people are scared to get into those railway stations, because first of all, these are all along the canal that we have over here, which means that the railway stations are set up invariably in areas which are not very sanitary, and then there is isolated areas. As a result, there is greater risk associated with it. So modernization of infrastructure will ensure that there is more use of all of these things. Both of these are very Chennai specific examples. So people who are listening from other parts of Tamil Nadu or India, so you can think of your own examples from your perspective where modernization will come in handy of existing infrastructure. Okay, then third point here, first was integrated multimodal transport, and second is modernization of existing assets. Third is disaster resilient urbanization. Disaster resilient urbanization. urban floods, we know what kind of damage it causes. It's after the flood comes in, we realize that the house that we are living currently was once upon a time a riverbed. So these kind of issues we'll only get to know once. So ensuring that any infrastructure we build is disaster resilient. Improving public transportation. There are many experts who suggest that building flyovers or wider roads is not the solution. Reducing the number of people who bring their vehicles onto the road is what is the solution. So public transportation, or having a top-notch public transportation, is the solution to traffic pollution and all these kind of issues, is what, not just simply building infrastructure. So while we build on one side, we have to enhance our public transportation system as well. Then along with it, I spoke about tourism infrastructure, right? So in that heading, preservation and upkeep of heritage sites and monuments, preservation and upkeep of heritage sites and monuments. And most significantly of all, let me ask you a question. Are you happy paying toll if you are traveling on highway? So this no is the problem that the government is facing. Okay, so while India is moving more and more towards PPP model, public-private partnership model, it inevitably also brings along with it private putting in a lot of investment effort. So the people having to accept it first of all. Okay, the Bangalore-Mysore expressway that is there, they had to build fences, iron steel fences across through the entire length, or at least in certain pockets where people were entering into the highway, traveling for about 20-30 kilometers, then exiting to bypass the toll, and then once again entering and traveling. So to prevent these kind of activities, so there has to be a greater public acceptance across the nation to ensure that private participation, because the government alone cannot do it. There is not enough fund in the hands of the government to do it on their own. So public-private partnership is inevitable, and if you're asking the private to do, they should have some monetary benefits out of it. Okay, it might be very difficult for many people who have traveled, who have started traveling now at this age, to understand how great the current infrastructure is in comparison to how it was, let's say, even 10 years back. Okay, so those who have traveled in both would be happy to pay the toll that they are collecting. Okay, it will tie up to, definitely. Modernization of the toll booths itself, right? Yeah. Correct. True. Correct. Correct. So that is true. In fact, the high. All these points, yeah, everything, yes, I completely agree with what she said. In fact, we have a toll here, I think in the Poonamali road, that road has been very poorly maintained for a period of time. The High Court even pulled up saying that you cannot collect toll on a road that you are not even maintaining properly. Okay, so why are you collecting? So that happened. So this is, it is all tied up. So the roads are not, if they are not maintained properly, then obviously people would resist paying toll, and that should not be the case. That should be modernized as well. So that will come under that modernization of existing assets. Yes, they are all true. But when we initiate a project which is PPP itself, there is a general resistance, because if private is involved, there will be toll. If it's only government usually doesn't. Subjective. Will you be happy to pay? Don't know. If you say so. If you say so. I completely agree with your viewpoint. If I have a more comfortable life, if I have to pay money for it, I'll be happy to do. But not everyone may think along those lines. That's the problem. Otherwise, that's why I quoted the example of Bangalore-Mysore expressway. You can travel, the high speed given there itself is 100, and sometimes you'll wonder, why am I going so slowly? That is how good the road is. But then people, why do they bypass it when they get such a good facility? Mm. Okay. Which is okay, which is actually a very interesting point once again. So what she says is, it's actually again very interesting to discuss over here, because what she says is, in some western countries, when they build infrastructure, they'll ensure that this infrastructure is isolated from everywhere else, so that people can't just bypass. Once you get on the expressway, you can't get out. Elevated bypass, we have those in India in some parts where that is there, but the problem there is right now, once again I quote the example of Bangalore Mysore expressway. In Karnataka there is a discussion going on right now to build another Mysore Bangalore highway. Why? Because their minister is now feeling that this expressway is isolating the highway from the people who are dependent on making business out of the highway. Okay, business in sense, not in a negative sense, by having stalls and restaurants and exhibiting their cultural commodities and toys and all those things. So they are losing out the business opportunity. Something like that, yeah. So they want commerce also to be a very important part of it, to ensure that these highways are, otherwise safety also becomes a concern. When you don't have people around, safety on highways also becomes a concern. That was again to quote the same highway example, because I travel on that quite a lot. So there have been instances where in the middle of the night people have faked accidents and looted people. When there is no shops or anything around, these kind of tendencies will also come about. So it's a bit of a, both sides are there, but like you said, integrating all of this is what is the key. Okay, so thankfully I did not initially start with the discussion and directly went to the points. We are done with the set of points here. Investment and infrastructure, keeping it going. So that is what it is. Chapter 7. Oh, 10:30 I said I'll finish economic survey, no? Okay. Chapter 7, industry, all about business reforms. So maybe at the end of chapter 9 we'll take a break, come what may, because industry, services, agriculture, that will be one point, and then after that we have 4 chapters which is a little away from the conventional areas of discussion, innovative points that are mentioned in the survey. So industry, all about business reforms. So there are some global challenges which we have already discussed. One more time I say that, you will be like, how many times will you say the same thing? So global challenges we have discussed, particularly with respect to India, Indian industry. The steel industry has done quite well. India is the second largest producer of steel after China. So steel industry has done well. Cement industry has done well. Chemicals, petrochemicals, these have done well. These have been stable. Okay. What has done extremely well within the manufacturing industry sector, which is overall lagging, but within that, what has done extremely well is consumer focused commodities. So automobiles, electronics, pharmaceuticals, these have done very well. The conventional areas of steel, cement and all those have done stable, they have done good, but consumer focused goods have done even better than usual, because we already saw in a previous chapter, right? Consumption expenditure has increased 60 to 61.3. So there has been a lot of increase in consumption. Plus one of the risks we saw in the banking sector, increase in consumer credit. So a lot of times people not having income would still consume, anticipating the future income that they are going to get as well. So that is reflected here as well. So what is the need in this sector? It's a very brief chapter. What is the need in this sector is to improve research and development facilities. I will narrate the points separately. R&D investments, innovations, then greater formalization of the small manufacturing sectors. Once again, something covered previously, focus on MSMEs is a main area. Even in the secondary sector, that's still the key. Business reforms that are required at the state level. The factor market regulations that will encourage the business sector. So these are the key points, and of course coordinated efforts from the perspective of education systems which provide the skill level, the government regulations, the private businesses, all of them. Coordination is something that is necessary. So this is a basic analysis of this chapter. Please make a note of the points. So industries that have done well, make a note. Steel, cement, chemicals and petrochemicals. Stable growth in these. Steel, cement, chemicals and petrochemicals, stable growth. Second set is automobiles, electronics and pharmaceuticals. Automobiles, electronics and pharmaceuticals. these are the growth drivers. Okay. What is the need in the sector? Fostering R&D investments and innovations. Fostering R&D investments and innovations. Enhancing growth and formalization of small manufacturers. Enhancing growth and formalization of small manufacturers. Business reforms at the state level. Small manufacturers. Enhancing growth and formalization of small manufacturers. Then business reforms at the state level. And finally, coordinated efforts. So who are all involved in coordination? All tiers of government. All tiers of government. Private sector is actually doing the production. Skilling ecosystem. Academia. And R&D institutions. Why I am focusing on this is because these are all points for mains. Almost certainly you will get question about MSMEs, industry, secondary sector. India's future, we believe, the government believes, lies in improving the secondary sector. Industrialization is the pathway that we have seen for ourselves. Although there are differing voices, there are people who say we can generate jobs in the service sector also, we cannot give up on industries. Okay, so in that sense, these points, almost certainly there will be questions that are asked and you can use these points. Okay, all right. Chapter 8. New challenges for the old war horse. Why old war horse? That's been the sector that's been driving growth for the last 35 years now, 35, 45 years, 80s it started, continues to be so. There are a few key points here, but I'll quickly tell you what is the crux. It is not just India, the world itself has been growing based on service sector. I mentioned in the first chapter itself, while the secondary sector has stagnated across the globe, the service sector has been driving the growth globally. In India's case also, while agri has done very, very well, it's a service which has been driving the growth. Okay. India's trade balance, although we have a trade overall deficit in the current account, the deficit is kept at whatever controllable level it is, mainly because of the earnings from services. Of course, remittances play a role, but service exports is a major contributor to the inflow of money into the current account as well. An interesting area into which we are evolving is greater servicification of the secondary sector. This is something that is mentioned, where secondary sector industries are, and even to some extent primary sector, but mainly the secondary sector is using more and more of services as a part of their production activity itself. So this is what is called as servicification. So service sector is not only about explicitly where service itself is the output, but service being the input. That area is also something that is growing drastically. So there is greater servicification of the secondary sector. That is a takeaway from this chapter that is there. Plus logistics services are gaining significance. Digital technology in business processes, So greater technology input that is there in any business process that is there. So you take a look at even something like repairing cars these days. You go to a car showroom or a mechanic shed, they don't open and check what is there. They connect your car to a system and they figure out what is wrong. So developing those systems, that is what we mean by, again, servicification. That is also what we mean by digital technology in the manufacturing processes or in the business processes. Okay, so these are the significance in the Indian economy, and there are certain needs. We need more skilling of the labor force with evolving areas coming up. I'm not mentioning in depth of AI here because there is a separate chapter about artificial intelligence, but we have to skill, we have to create enabling environment for generating those skills and transferring those skills. What do we mean by an enabling environment is because the service sector is something that's very dynamic in nature. On a very regular basis, skills keep changing. The biggest problem that India's service sector, take IT sector for example, they face is that when an IT graduate comes out of engineering or computer science graduate comes out, what they learn as knowledge is outdated knowledge the moment they get recruited. It is not relevant to what is required in the sector at all. So our education and the regulators have to be more dynamic in nature. We usually always have a pattern, right? In academia we say this is the syllabus and this syllabus is what we have to follow. That syllabus needs to be more dynamic, especially in dynamic sectors. In certain other sectors it need not be, but in certain sectors it needs to be. That's again a part of deregulation, but that is what we mean in this case as creating an enabling environment for the purpose. And there is a 4-step strategy which is mentioned as well. While service sector has overall performed well, there are certain service sectors, there are certain areas within the service sector we have done really well. We should be defending what we are doing. So we have a certain market share, we have certain growth, we should continue doing that. So defending it is an objective. Then we have to stimulate certain areas, accelerate. One is defend, the second is accelerate, where we are doing reasonably okay, but we should try to outpace global growth, so that there are certain areas to accelerate. And then there are certain areas where we need to transform itself, where we are not, we are doing what we are doing is a little outdated, we are not able to have a global presence. So transform that. And then there are certain areas which are completely untapped. We have to enter into those segments of the service sector as well. So we categorize it into 4 types of areas in the service sector. So this is the crux of what we have in this chapter. I'll make a note of these things. Growth in service has been countering global merchandise trade slowdown. Growth in service has been countering global merchandise trade slowdown. That's a global scenario. Indian economies, in Indian economy, service exports is a major contributor to current account balance. Second point, second point, there is greater servicification of industrial sector. What is the need or the way ahead? One, skilling of labor force. Second, creating enabling environment. What is enabling environment? A simple and transparent grassroots level governance. A simple and transparent grassroots level governance. a 4-step strategy can be used. As I told you, the 4 steps are defend, accelerate, transform, and focusing on untapped areas. Defend. First is defend. I'll give you a couple of examples of sectors. Defend. It should be defend. IT, right? So computer and information services. Professional services. That's defend. Defend means keep doing what we are doing to ensure our market share is not lost. Second, accelerate. Transport. Accelerate. Transport. Education. Financial services. So when we say defend, we say sustain growth. When we say accelerate, we say stimulate growth to outpace global growth. Okay. So next is transform. Transform means boost productivity. This is where travel, healthcare, cultural and recreational services, and finally untapped areas. Untapped, that has not been tapped yet. Untapped, increase market share there. Insurance and pension services, audiovisual services, some examples. These are some examples. Courier services, cross-border courier services and all those. Third is transform. The transform is a boost productivity, yeah. And fourth is untapped, increase market share. You're okay with doing agree before break? It will be a logical point. If there's something like that. Okay. So chapter 9, agriculture and food management, sector of the future. So I already mentioned about agriculture, remarkably resilient, to an extent maybe unexpectedly so as well. So that is something that we have done well, but weather has been a disruptor, not maybe in the particular year, but in general that is a disruptor. That is something that we have to guard against. So there is weather dependence still, that is a concern. There is a specific area of discussion about floriculture. Is an area that is considered as a sunrise sector in India, flower related agriculture, and there are certain specific areas within that which are very lucrative. There is a concept called as cut flowers where it is a huge demand in the global market. So there is floriculture, and then there is horticulture, which is where the growth and potential is greater than your conventional traditional agricultural activities. These two areas are specifically highlighted in the economic survey, plus greater focus on pulse production and lesser focus on cereal production. There is in general overproduction of cereals and underproduction of pulses. I mentioned that in a previous chapter as well. So that is there. Of course, we need to invest more on R&D, particularly to improve climate resilience. Okay, so research and development, climate resilience, at the same time high yield as well. So high yield varieties with climate resilience. The issue with our previous high yield varieties was that they were very susceptible to climatic attacks or pest attacks and all those things. So we had to use a lot of chemical pesticides in the process that created trouble. So our research and development should work towards climate resilient, at the same time high yield varieties. Then greater focus on micro irrigation, digital technologies. These are the focus areas of the agriculture sector. So please make a note. First is remarkable resilience shown by consistent growth rates. The reason for this is some very key government initiatives which has ensured. So reason for this is various government initiatives to promote crop diversification and increasing farmers' income. To promote crop diversification and increasing farmers' income. So a crucial area in India is still weather dependence. So weather dependence is a crucial factor. One solution suggested to this is climate resilient crops is later through R&D to diversify sources of income, allied agricultural activities. Diversifying income streams through allied agricultural activities such as animal husbandry, fisheries, agroforestry. It is in this context that we talk about floriculture being a sunrise sector in India and horticulture being more productive and profitable than traditional agriculture. Being more productive and profitable than traditional agriculture. So what is the need way ahead? Promote agri practices which are agri practices which align with specific agroclimatic conditions and natural resource availability. You know examples of this. Sugarcane cultivation in a water scarce region is not a great idea. That is the example that we have for this. Just because it's remunerative doesn't mean that is the best thing for that particular region to do. Investment in R&D, investment in research and development. What sort of R&D? Climate resistant varieties, number one. Climate resilient, not resistant, climate resilient varieties. Better agricultural practices. For that itself we need innovation or research. Diversification to high yield varieties. So that is investment in R&D. Then we have greater focus on micro irrigation. improved price discovery. This is something that we mentioned in previous inflation chapter also, right? Improved price discovery. You know about ENAM, right? ENAM portal where you can access what is the overall price. So that is something that's essential. Modernizing food grain storage. All right. Okay, so I'll just repeat the last couple of points because there was a cut of the connection got cut. So modernizing food grain storage to prevent crop loss, and then countering overproduction of cereals and underproduction of pulses and edible oil. Okay, we'll take a break. We'll come back in about 10 minutes time. 10:55, 11:05. We'll be back. 4 more chapters left in this, and then budget. Duration is 10 minutes. People online. Alright, so shall we resume? Okay. So there's a very fundamental question which someone has asked online. How much economic survey is important for prelims? Let me decide whether to sit through the rest of the class after you tell that. Abhina, that person has not said, I am saying that. Okay. I'll make a statement which will make you wonder why am I sitting here. But I'll be very open about it. It is, if I tell you that only by reading economic survey you can clear prelims examination, that is something I say only to promote this class. There's no truth in that. So, if you are a regular reader of newspaper and if you have read the news in the days following the presentation of economic survey and budget, which is say about 2 weeks from February 1 onwards, at this stage you don't have to go and read the economic survey or budget. At this stage you don't have to go and freshly read it. But if you are serious about clearing the UPC examination, then you must, my opinion, okay, you must read at least one economic survey and analyze at least one budget, whichever it is, whenever you have the time to do that, that's when you should do, which means you should have done in the past, not now. Why? Because that will give you a much more holistic perspective when it comes to approaching a question and answering that particular question. It will make you think along different perspectives. Okay, so if you specifically ask me is economic survey is going to be very important for prelims, my answer is no. But for mains it's going to be very, very important because it will make you think differently. The survey will bring in various perspectives which will enhance your mains answer writing. The points per se may not be directly something that you can get only from the economic survey. You'll get it from the survey. The biggest advantage of survey, again from mains perspective, is it's a place where all the information pertaining to a particular heading is collated and given to you. You can get the same information if you are a regular reader of newspaper, but that is disaggregated data. This is aggregated data, aggregated information. So that's how it is going to be useful. So to get that structure, there is no compulsion. You have to read the most recent economic survey. Any one economic survey, if you have read it properly, or not properly in the sense where you can recollect everything, just to get an essence of it, where it will make you read that and then you think, oh, this is a very interesting perspective. I never thought of it this way. If it makes you think that way, the job of economic survey is done. Budget is a little more relevant from the prelims perspective because there are questions that are asked like, over the last 5 years, fiscal deficit has seen a increasing trend, debt to GDP ratio has increased. Again, they won't ask you particular numbers. When I show you the budget, which I will do in the last whatever time that we have left, I will show you numbers, not for you to memorize the numbers, but for you to get a general idea of what the numbers look like. That is the area. Because if they say the fiscal deficit has been reduced from 16% to 10%, you should know that is wrong. The fiscal deficit was never 16. Even during COVID, when it went into a peak, it was only 9% of GDP. So you should have a rough idea of what the number is, not a precise memorization of the number. I'm talking about this only from UPSC exam perspective, civil service exam perspective. If you are preparing for some other state level examination or maybe banking examinations, then numbers will become very important. Concepts that are given in the economic survey will become very important. The question itself might be framed as per the recent economic survey, say something like labor force participation rate has, which of the following is the labor force participation ratio? So I don't know a number, I'm just saying number 15.6, 15.7, 15.8, 15.9. You have to choose the correct answer. So that is not the UPSC type of questioning. So you don't have to focus on that if you are preparing for civil service examinations. So far, since I have said this, so that is how it is. Okay. For those who do not understand Tamil, what I said is, just because I said it, no change is going to happen. So that is what is my view with respect to economic survey and the budget. With respect to budget also I answered that. With respect to budget, it's a little more important from prelims perspective because some information with respect to trends are explicitly given in the budget document. So yes. Okay, coming to climate and environment, adaptation matters. So there are two targets that India has which can sometimes be looked at as contradictory in a way, not necessarily so, but it can be. One is to attain a developed nation status by 2047. The other is to have net zero emissions by 2070. Okay. So although the timelines may vary, the more we try to grow, developed nation, effectively we say developed, but it's actually growth that we are measuring. Per capita income is what is used as a measure over here. So for us to generate income, if we focus too much on not polluting, then our growth might actually slow down. This is where the contrast comes in. Contradictory in nature, I say. If you are trying to grow, we should forget about all other things. We should not think about polluting and all those things, because sometimes the polluting method is the easiest and the cheapest way to grow. The other methods of growth may be very costly, which is why there is a contrast between these. Okay. So are these actually contradictory in nature? In India's case, it doesn't seem so. You are already familiar with an index which UNDP publishes. Most recently they published, called as Planetary Pressure Adjusted Human Development Index, PHDI. Okay, I've mentioned in multiple discussions, interactions previously, that this is a very important report because it has been newly added into the HDR list of reports. 5 reports were there previously, the 6th one has been newly added. I've mentioned this previously as well. It's very important to learn indicators. What they take is, they take HDA, they adjust it for per capita carbon emissions, carbon dioxide emissions, and per capita, I think, new material usage. I'm not precise with respect to the word that they are using. Material footprint, I think that is what, per capita material footprint is what is used there. Okay. So here the why I mention this right now is because as per that data, India's per capita carbon dioxide emission, or in general carbon emission, is lower than the global average. In spite of India being one of the fastest growing economies, our per capita carbon emission is very low, which is true with respect to this, what the economic survey is trying to talk about as well. India is already having a low carbon growth. We are growing by emitting lower levels of per capita carbon. Absolute terms will be high because it's a big country. Okay. So we are already a low carbon emitting country, but our focus should be how to ensure that we sustain this growth without increasing our carbon emissions, per capita carbon emissions at least. This per capita can become a little challenging if our population growth rate starts declining, and that is the direction that we are going in as a country, right? We are trying to curtail or contain our population growth. So when that happens, the existing carbon emission itself can become a bit of a challenge. So these are certain challenges that we have. Plus some other challenge that we have with respect to the climate resistance or climate resilience is that there is a significant reduction in global support for developing countries dealing with climate resilience, in terms of be it transfer of technology or funding that comes in, especially with the policy geopolitical tensions and the policy changes that they have brought in. There is an issue with respect to funding. So we again have to rely on domestic sources. We cannot rely on external sources. That has become a challenge as well with respect to climate and environment. So finance is a worry for us. Okay. So there are 2 strategies that we have to use. One is adaptation, the other is mitigation. I'm sure you are all familiar with respect to these climate aspect. There is adaptation, there is mitigation. However, look at the name of the chapter itself. Adaptation matters. Both are, we are not even claiming both are equally important. Yes, mitigation is important, but we, in this survey, we are giving greater significance to adaptation. If we don't adapt, then there is a very good chance that the gains that we have had so far itself might be lost. Adaptation is to ensure that we preserve the gains that we have had. Mitigation is to ensure that in future when we grow, we take into account the considerations. Okay, so with respect to mitigation, there is this, you might have heard of this LIFE, L-I-F-E, lifestyle for environmental sustainability. Yeah. Okay, so make a note. So this is the crux of it. There is something called as a life mission. So I'll talk about it. So this is the crux of it. Adaptation, mitigation, but adaptation is the key focus area over here. So first we will talk about the contrast. Our 2 objectives are to become developed nation by 2047. Which requires robust growth. Which requires a robust growth. To become developed nation by 2047, which requires robust growth. On the other hand, another objective is to achieve net zero emission by 2070. to achieve net zero emission by 2070. So we now say when we try to achieve the target of Vikshit Bharat by 2047, we have to make sure that that growth that we attain is inclusive and sustainable. Okay, to embed inclusivity and sustainability into our growth, that is our objective. Make a note of that. To embed inclusivity and sustainability into our growth strategy. Okay. So what is the current scenario with respect to India? Make a note of that. First, per capita carbon emission is already low. Second, we have a good share of renewable sources of energy. So I'm not saying current challenges, I'm saying current scenario. So we have a good share of renewable energy. But we lack two things: storage technology and access to minerals. Just give me a moment. So the last thing we wrote was access to minerals, right? Okay. So there's another challenge that we have, which is reduced global support for climate action in developing countries. Reduced global support for climate action in developing countries. So what is the way ahead? We need a holistic approach which embeds mitigation and adaptation. Mitigation does what? Addresses the root cause. Okay, addresses the root cause. That's where lifestyle for environment, LIFE, lifestyle for environment initiative. where we encourage sustainable practices and a circular economy. Where we encourage sustainable practices and circular economy. What is circular economy? We have seen that green triangle, no, which goes in circle. Reduce, recycle, reuse. Okay, this is exactly what is HDI's material footprint per capita. How much of new material is used in the production process? How much of recycling is done? The more we recycle, the lesser will be our material footprint. Okay. So what the survey is suggesting is, take this to the grassroots level once again, which means take this to the schools, classrooms in schools and colleges, where right from a very young age, convey this lifestyle for environment to the children, so that right from a young age we do that. In fact, I don't want to get into this culture discussion, but there is a lot of cultural aspect which comes in, where in our households we are taught at a very young age that we should not waste food. And we are actually told, look at how many people are going hungry. We are brought up considerate about all these aspects, right? So take this further one step ahead. It is already there, but take it further. If there is a loss of this happening, then take it to the schools and bring in these aspects of sustainability. And at least recycling, we don't do as much as we should be doing. So we always go for newer and newer and newer. So that aspect, circular economy aspect. So the economic survey suggestion is, take it to the schools and colleges and convey it, so that we bring about a lifestyle change within the population. That is a mitigation measure that is done. But mitigation is of lesser focus here. The greater focus is on adaptation. Okay, because in the absence of global funding, adaptation becomes crucial to prevent loss of gains. Please make a note of that. You would have written, for mitigation, addressing root cause. Okay, that's where we wrote the example as lifestyle for environment initiative for mitigation. If you have not written, you can write that. I already told you, adopt a holistic approach which embeds mitigation and adaptation. In mitigation, we write addressing root cause. Example for that is lifestyle for environment initiative. So where I said encourage sustainable practice and circular economy, take it to the grassroots. So that is mitigation. Adaptation, minimize adverse climatic impact. What has happened has happened. Now what can we do? That is adaptation. Minimize adverse climate impact. So we have grown in a particular manner and we have caused certain damage to the environment. If we don't adapt, all the gains that we have had will be lost in future. To prevent that, so adaptation is of great significance now. How can we do that? Measures given are policy initiatives taken by the government. So policy is one. Building resilient infrastructure. Then R&D in climate tech. Then encouraging domestic financing. And most significantly, adopting a region-centric approach. You cannot have the same adaptation strategy in every part of the country. In different parts of the country, there has to be different strategies. Okay, adopting a region-centric approach within India. Alright. Also, in the heading of way ahead itself, we cannot give up on fossil fuel. That is something that's been acknowledged by the government, that's given in the economic survey as well. We cannot give up on fossil fuel till we come up with a sustainable alternative, which we have not come up with yet. So what to do? Make it low emission. Make the fossil fuel low emission. R&D again plays a role over here. But we need to keep working on building sustainable sources, right? So battery storage is a major concern for us. There's a lot of energy loss that happens. So improve battery storage tech, that's something. Then work on carbon capture technology, something they are already discussed in agriculture, climate resilient agriculture, that's again a technological change. So that is this chapter. Moving on to social sector, extending reach and driving empowerment. What all is covered in social sector? I already mentioned when I mentioned social infrastructure. Health, education, rural access to these things, drinking water, sanitation. That is what is the crux of this chapter again. So, what is India's growth strategy? Please make a note. India's growth strategy is all, see, for all society, social welfare kind of answers. This will be, and inclusive growth. This, whatever I'm going to say, is going to be very useful. This entire chapter actually. So India's growth strategy is inclusivity and welfare for all. Inclusivity and welfare for all. How to achieve this? Empower citizens through education, healthcare, skill development, and social infrastructure development. Next is using innovation and tech, using innovation and technology in the above said areas to improve the above said areas. All right. So what is the major area that India is lagging in? One area that they have highlighted is last mile connectivity. There, here, last mile delivery is what we use. So delivery mechanism is where we are lagging. Delivery mechanism. So we have an initiative, but it doesn't reach the intended beneficiary to the desired extent. So last mile delivery is what is missing. Okay. So I will mention now under different headings how this last mile delivery is missing and what can be done to counter it. So as a mixture, way ahead, issue as well as way ahead, sector by sector. Start with education. Has education been made compulsory? Yeah, for everyone. So 6 to 14, it's a fundamental right as well. So it is there. The government has done what it has to do, but is it, are children enrolling as well? Much more than in the past. But how are the learning outcomes? This is the last mile delivery that is missing. So learning outcome gap is the issue. Solution is given as need innovation in teaching. Some keywords I'll tell you, make sure you add it in your answers here and there so that sensibly, okay. So, prioritize peer learning, prioritize peer learning, social and emotional development, digital literacy, and life skills. How will it help? What is the expected end result of this is boost academic performance, foster critical and cognitive thinking skills, Yeah, these two, foster critical and cognitive thinking skills among students. So this is with respect to education. Okay, with respect to health, there are two areas of discussion. One is the high prevalence of non-communicable diseases. Second is mental health. When I say mental health not being acknowledged at all is the major concern. Civil service aspirants should know. Okay. Okay. So with respect to health, what is the way ahead for us is focus on prevention. Focus on prevention. What are non-communicable diseases? All these lifestyle related diseases. So focus on prevention by ensuring a healthy lifestyle is what we are saying. So this will help in, so what is the end result? Enhance life expectancy, quality of life. In fact, it will improve our standard of living as well, because the less diseases we have, the less we have to spend on our health care. Okay, so how is it going to help? Enhance life expectancy, quality of life, economic growth through lower health expenses, and improved productivity. These are the gains to be had. Once again, the solution that is given is take it to the grassroots level, convey the significance of good health right from a very young age. Okay. With respect to mental health, there has been a lot of debate going on recently about how many hours people should be made to work, and 90 hours pattadu, not enough. So that is an ongoing debate. Since the government did not say anything, I can be openly critical about it as well. So in the context of that, the economic survey has not explicitly taken a stand, but has spoken about quality over quantity, which is given by worker productivity. If you make a worker work for long hours, but it compromises on their productivity, what is the point of working for long hours? So productivity should be the focus, quality should be the focus, not quantity. Also ensure that the person has time to go and unwind, and that will take care of the mental health aspect. Okay. But there is also a discussion that is there on societal support systems, building societal support systems, where people should have others to talk to when they are experiencing some trouble, not necessarily in a formalized doctor patient kind of a setup. The society itself being more accepting of mental health issues. You go and, for example, you go and cry to someone, if the natural response is going to be, are you a baby to cry, then you will never feel comfortable crying without bringing gender inside it. If you bring gender inside it, it's a whole different discussion altogether. Okay, so without bringing that itself, as an adult, if you cry, the question is, why are you such a cry baby, as though it's only baby's activity to cry. Okay, anyway, so without crying too much about it, so that is so improving overall well-being. This will improve worker productivity and build a harmonious society. So that is the key points over here: overall well-being, worker productivity, harmonious society. So that is with respect to health. Then rural infrastructure. So we talk about connectivity. So rural connectivity, better roads and similar infrastructure. Housing, sanitation, drinking water. These are the basic things that we talk about. Along with it is included social inclusion You know what we are talking about, right? Preventing that segregations from happening and all those. So social inclusion. And we spoke about livelihood, to ensure livelihood, microfinance, self-help groups, promoting all these things. So that is given as the way ahead. This will improve the quality of life. Again, the conclusion is going to be improving the quality of life. Most significantly of all, when we talk about throughout about micro, small, medium enterprises being the crux of growth, a lot of times what prevents these smaller enterprises from coming up is regulatory barriers. So we should move towards a trust-based regulation. Okay. Self-reporting is something that we talk about. That should be the focus. Even for social sector and social inclusion, we should ensure trust-based regulation. So it should not be, I have a regulatory rule, are you doing it? I'll come and check. I am not going to check, you come and report it. You come and tell me what you're doing, I'm going to believe you. So the same discussion that we had about how to deal with NPAs. As long as you are profitable, even by giving up loans, if you are profitable, then what is the problem? Right? Same kind of a logic. Yes, there might be a few instances where underreporting happens and people might try to violate, but if the general norm is one of trust, then what she had mentioned as a point earlier, right? If you provide good quality, people will eventually start feeling, okay, maybe we should pay because we can contribute towards it. So that is what is meant by a trust-based regulation. Rather than pointing out a few instances of violation of trust, just blindly trust and hope that they will reciprocate. So that is what the economic surveys focus on, trust-based regulation. Okay, so that is this chapter. Couple more chapters, we are done with survey after that. Employment and skill development, existential priorities, and the next one is also related about artificial intelligence and labor. With respect to employment and skill development, why we say existential priorities is because of evolving scenarios in the labor sector, but in general, to start the discussion, we are doing exceptionally well is what the economic survey talks about. Why? Because unemployment rate is very, very low is what the economic survey says. I keep saying that is what the economic survey says, or maybe that is what the surveys conducted for the purpose say. Okay, unemployment rate is low, labor force participation ratio is very high, and you have worker population ratio also quite high. So all these are the indicators that we can go by. We cannot go generalize thing, oh, everywhere around I'm not able to get a job, so situation is poor. Is not how we look at it. Okay, are you guys unemployed? No, you are not presenting yourself for work, so you will not fall into the category. So you will not be included in that category. You should go and register some cell saying I'm looking for a job, please give me, and when they give, you should accept it. You are not in a position where you would accept it. You are saying, no, I'm preparing for UPC exam. I don't want your small scale jobs and all those things. Only hero. So that is how a lot of people who seem to be unemployed to the naked eye would not come under the category of unemployed in this. Okay, there are different categorizations. If you work for so many hours in a day, you will not be categorized as unemployed. So by that count, unemployment rate is quite low. Okay, so very good indicators, but there are some challenges. You have a particular employment. A lot of people in India have employment, but they don't have high quality employment. A lot of them are underemployed. Okay, underemployed, which means they are not getting employment in proportion to the skills that they have, or they are not getting the level of income that they believe they should be getting. That's where underemployment comes into the picture. Plus we have issues with disguised unemployment and other kinds of, where again people seem to be employed, but in reality without contributing anything to the income generation or output production that is there. Okay, so certain labor measures have been brought in the country, labor codes that were brought in recently. Specific focus in this chapter is about female labor force participation. A lot of deregulation has been done with respect to female labor force participation. Night shift constraints have been removed. Now women can work night shifts as long as appropriate safety measures are taken. Then compulsion of having creche facilities, that has ensured that more women participate in the workforce. Previously women were not allowed in hazardous occupations. Now they are allowed in hazardous occupations, again provided proper safety measures are there. Is this good or bad is a different discussion, but this is supposed to enhance the participation of women in the workforce. So that is again so reformative measures that is being done. Deregulation again fits into that definition. Please make a note. labor market indicators have seen substantial improvement. What has caused this is post-pandemic recovery and increased formalization. Post-pandemic recovery and increased formalization. What is meant by increased formalization? Are gig workers part of the formal economy? They are now, because there is a law which provides certain protections to them. So this is what is called as formalization. The ones who were previously not covered by a law have now been brought under some kind of a law. So that is formalization. By formal we mean there is a law to regulate or govern their activities. That is formalization. So, okay. So how do we know we have made substantial improvement? Periodic labor force survey says so. PLFS, periodic labor force survey says so. Unemployment rate has seen a decline. Unemployment rate has seen a decline. LFPR, labor force participation ratio, and worker population ratio has seen an increase. Okay. If you want to memorize numbers to quote it in your mains answers, not a bad idea. Closer to your mains exam, after your prelims, you can go and look for specific data. If you win, it is there in the economic survey, this chapter, you will find the numbers. I am not mentioning the numbers over here. So that is the source of why we say there is a substantial improvement. Okay. So what are the priorities for India? So, or way ahead. Number one, quality jobs that offer sustainable livelihood. For which we need three things: reskilling, upskilling, and new skilling. Second, align workforce with global demands. Simplify compliances. What is the one word? Deregulation. Complaints for whom? For the employers. When the compliance is easy, they'll hire more. Okay. The harder you make it to fire someone, the less likely they are to hire someone. A previous economic survey has highlighted this. The more difficult you make it to fire a person, the less likely they are to hire a person, because they know once they hire, they cannot fire. So they go for instead contractual labors rather than taking permanent labor, which means lesser safety net and all those things. Okay. So simplify compliance, promote. This promotes, when you simplify compliances, what does it do? It promotes labor flexibility and strengthens worker welfare. Next is boost women's workforce participation. They have already taken some measures, as I told you, enabling night shifts, then mandating creche facilities, opening up of hazardous sectors for women participation. And finally, when we are moving towards digital economy and renewable energy, there is more opportunity for high quality jobs. So explore. So explore opportunities in, the last point is explore opportunities in digital economy and renewable energy. Okay. Last chapter, 13th, labor in the AI era, artificial intelligence era. Is it a crisis or a catalyst? That's the question. The one line answer that economic survey says is, we don't know. Okay. Also, the economic survey very interestingly says that, or predicts that, none of the fears that we have is going to materialize anytime soon. Okay, they are saying that artificial intelligence right now is like the tip of an iceberg that's visible to us. What is the reality with respect to artificial intelligence? The unexplored areas is so much that we don't know anything about artificial intelligence. What is visible right now is very, very small. We are now trying to prepare for a future about which we don't have any information at all. However, if something happens, we should be prepared. So we can't ever say what would happen, at what pace it would happen. So this is what the economics of this chapter is focusing on. Okay, so many of the fears that we have is perceived and it may not be real. It may not materialize in the immediate future or in the foreseeable future. Maybe not even in our generation. But so even in spite of all these artificial intelligence taking over or contributing to our daily life, that is not the extent. If you have seen the Matrix movie, that is the extent of imagination that people are going to. We are nowhere near to that extent, is what the economic survey doesn't quote this movie. I'm just saying out of my own thing. So that is not the extent to which, that is the extent of fear. We are nowhere close to that. But we should be prepared, especially a country like India. We should be prepared for that, because we have right now what is necessary for that: workforce. The demography is there. So provided appropriate skilling is done in that regard, we will be in a good position to take advantage of this, just like how we were when computers were the thing that we feared the most. There was a time when offices used to shut down and go and protest, saying that you cannot replace our ledger system with computers because that will take away our jobs. At that time, it was unexplored territory. But eventually it has turned out that the very same computers, the quality of life of India, the standard of living of India, everything has changed across the globe. That has happened. Just that doesn't mean that that is how it is going to be for AA also, but we should be ready to take advantage of any opportunities that is available. So please make a note. Unprecedented opportunities and significant challenges for labor market. Unprecedented opportunities and significant challenges for labor market. Why are they using such vague words? Because no one knows what is happening, what is going to happen. So we use more generic kind of words. So what we should be doing is pay keen attention to evolving technological landscape. Pay keen attention to evolving technological landscape. Which again says, right now we don't know anything. Keep observing, we will learn something out of it and we'll be able to adapt. Okay. Right now, what are the barriers that artificial intelligence faces? Okay, what are the barriers? Barriers to artificial large-scale AI adoption. Reliability is the question. Resource inefficiency and infrastructural deficits. This is not India's case. This is globally. That provides India with an opportunity because globally it's an area that has not evolved. We are struggling in the manufacturing sector because there are already countries which are doing well over there. This is an area where no one is doing well. So India has an opportunity there, okay, because everyone is in the new stages. We are also in the new stages. We can take advantage of that. So India's advantages are the demography and diverse economic landscape. So demography is the huge population. Diverse economic landscape, what we mean by that is different types of skills that are available within the country. Different areas of specialization. That's what is given as diverse economic landscape. What are the challenges that India faces? Challenges. Investment in education, skilling, and supporting institutions. This supporting institutions is given as a significant area. What is meant by a supporting institution is anything which enables a workforce to adapt. Let us say you have heard about the concept of structural unemployment, right? You have a particular skill, the skill requirements have changed, you have lost your job. Okay, a change has happened. If you have an institutional mechanism where you can go and upgrade your skills, which will provide you temporary support. Okay, till you gain the new skills, we are going to provide you some kind of a support, and after that you gain skills and you move on to the newer technology that is there. This is the supporting mechanism that we require. With artificial intelligence coming up, expected to bring completely new areas of knowledge requirement, reskilling becomes very important or new skilling becomes very important, in which case till the skilling process happens, there is some supporting mechanism that is necessary. So that kind of a supporting mechanism is something that we should develop as a nation. So that is where enables adapting to changing needs. Supporting institutions enables adapting to changing needs. So what do we need, or the way ahead is collaboration between policymakers, private sector, and academia. Why is coordination necessary? To align innovation with social goals. We should all innovate, but if the innovation is going to cause more harm to the society, then is that innovation worth it? So the alignment here, otherwise what would happen is the academia or the private entities would go with their own innovations without considering how it is going to impact. So a coordination between the three is very important because policymakers would always put society and social needs first. You are the policymakers, so you would put social needs first. Okay, private sector won't do that. Private sector would look at their own gains. Academia, sorry, benefits their own requirement, the private sector. That is what they'll focus on. Whereas academia would not be focused on all of these things. They'll focus on building technologies and only the science or whatever is behind it. So the coordination between them is very important to ensure that societal goals are not lost. Okay. So the conclusion in this chapter is AI can serve not as, you don't have to write it, okay, just heading itself is there. AI can serve not as a crisis but as a catalyst for equitable economic transformation. Why? That's what they are saying. That is what we are hoping for the future. That concludes the discussion on economic survey. 12 o'clock. Okay. It's all right. For me. I don't know for you. We'll take a look at the budget. See, there is a lot of way ahead that the economic survey has suggested, right? This should be done, this should be done, this should be done. Has the government done anything about it? Your answer to that lies in this document. Budget highlight, key features of budget. 16 pages, about 10-12 pages long. The government of India, the budget in the finance ministry has categorized, or government of India has categorized 4 pillars of development for India. These are the 4 key pillars. The 4 key pillars are agriculture, MSME, investment and exports. Okay, these are the areas that the government has identified as the key drivers of growth for the nation, for the upcoming year at least, and for the foreseeable future. Okay. Very fancy terms. Fuel is reform. Reform is once again deregulation. That's what is reform. Guiding spirit is inclusivity, and destination is 2047. Vikshit Bharat. So what are they going to do about or to ensure that Vikshit Bharat is accelerate growth, inclusive development? These are phrases that would help you write good mains answers. From prelims perspective, what is important is here onwards. Development measures for Garib means poor person, youth, youth, Annadata, the one who provides food, farmer, and Nari, women. So that is the keyword. Okay, so first is agriculture, the 4 pillars, right? Agri, MSME, investment and exports. So agri is given over here. They have given it as a 5-step process, national mission on high yielding seeds. Finance, your economic survey spoke about high yield variety seeds, climate resilience and all those things. Then enhanced credit through Kisan credit cards. Prime Minister Dhan Dhanya Krishi Yojana, developing agri districts program, specifically areas which are currently low productive. They have identified 100 districts which are currently low productive to focus on these districts to increase productivity over there. Mission for cotton productivity and Makhna board in Bihar. It doesn't end here. Atmanirbharta in pulses, a 6-year mission. So catalyst for rural economy growth. So these are all the answers to economic survey. Economic survey says do these, do these, do these. They already know the government is going to do all of those things. So that is, they are not working in silos, right? So whatever they say, the government will say, look at it, they said we have done it or we are doing it. So this is them doing it. These are the various schemes that have been launched for the purpose. Okay, supporting MSMEs and furthering Make in India. Again, credit cards for micro enterprises. The focus is again MSMEs, right? Because there also they said MSME. Here also one of the pillars, second pillar is MSME. Scheme for first time entrepreneurs. So ease of doing business, future ready workforce. All of these are points that we have covered under one of the chapters under the economic survey. So everything that you will find as way ahead in economic survey, or not everything that you will find here, you will find in the economic survey, because economic survey is much bigger in size. I told you about the alteration in MSME classification, right? So previously the MSME classification was micro was investment up to 1 crore and turnover of 5 crore. Then small enterprises 10 and 50, and medium enterprises 50 and 250. So that is investment, this is turnover. This was the criteria. This was brought in 2021 if I am not wrong. Now in the current budget they have revised it and they said if your overall investment is up to 2.5, you will be categorized as micro. And obviously micro will have a lot more benefits than even small or medium. Small will have more benefits than medium. Medium will have more benefits than larger enterprises. So by expanding the size, you are saying even a company which was previously not under MSME will now come under MSME and will get the benefits of MSME, will get the focus of the government. So which is where you are expanding the scope of what is MSME itself. The definition of MSME itself is widened. So we are ensuring that more producers get the benefit of the MSME benefits that the government is providing. So revised, this is important from prelims perspective. These numbers they might ask, because these are factual changes that have happened and it's not going to change for the immediate future. For the next 5 years at least, I don't see this changing. 3-4 years at least, it won't change. So you should, the questions in this year if they ask is most likely to be giving this for this or this for this and making an error in that, or giving a very correct statement saying that the micro enterprises guideline has been revised from an investment of 1 crore to 2.5 crore. They'll give the correct statement. So you should just be aware of it. Okay. So here it has increased 2.5 times. Here it has increased 2 times. 1 has become 2.5, 10 has become 25, 50 has become 125. 2.5 time increase in the investment and 2 time increase in the turnover. 5 has become 10, 50 has become 100, 250 has become 500. Okay. If you remember the old one, just remember in investment 2.5 times, in turnover 2 times. If you remember that, that is something that you can remember for the examination. Then investing, this is again, this is investment. So first we had agriculture, then we had MSME, then we have investment. But investment they are categorizing into investing in people, economy and innovation. So investing in people would be in terms of Sakshan Anganwadi and your expansion of Poshan 2.0, expansion capacity of IITs. This is investment in people, their skill levels and all of those things. Bharatiya Bhasha Pustak scheme, National Centers of Excellence for Skilling. These are all people investments. Then investing in people, economy and innovation, support to states for infrastructure, Jal Jeevan Mission. So this would be more like infrastructural changes, social infrastructure that we spoke about, power sector reforms, asset monetization plan. So all of these are with respect to that. This is infrastructural investment. And this is again about, I think this is innovation, research fellowship, gene banks for crops, germline. You had mentioned that, right? So that is something that's mentioned. Gyan Bharatam mission, research and development. This is innovation. So they split it into people, economy and innovation. Then promoting exports, given in a small heading. So export promotion mission, Bharat Trade Net and a few terms that are given. Again, prelims perspective, these names, everything from the first slide to this one, the names, the ministry concerned, if there is a fund allocation, not so important, but if you can remember that, or at least features of that scheme, what is it trying to, for example, we said that Dhan Dhanya Yojana, 100 villages of, they might give high productive, 100 high productive villages will be targeted. No, 100 existing low productive districts would be targeted. So that is what should be the features of a scheme you should focus on. Okay. Everything else, I think this is financial sector reforms, tax reforms. So all these is the deregulation that they are talking about. Tax reforms, regulatory reforms, indirect tax, what are the changes that are there? Direct tax, what are the changes that are there? After this, I won't say it's relevant. Till this point, say about 7 or 8 slides worth of information is what is relevant in this. You access this in the budget website itself, budget highlights, key features of the budget. So this is where the way ahead of the economic survey is highlighted. So this is what has been done. So this completes the discussion on economic survey and the government's implementation of that. From a prelim standpoint, what is important here is a couple of things. So I'll go to the annual financial statement, but first statements of fiscal policy under FRBM, because it has a very significant statement called as the macroeconomic framework statement. Some important data is something that you will find over here. What is the global economic growth? A number, if you want a rough idea of the number, it's given 3.3%. What is India's growth like? 6.4% in real terms, and nominal terms is 9.7, but 6.4%. That is what is the data that we have. Private final consumption has increased. Agricultural sector has grown 3.8%. Our target itself is 4%. When we say agricultural growth is something we are targeting 4, we are very, very happy with 4. We have achieved 3.8, which is why agri growth is considered to be good. Second, industrial sector is growing by 6.2. Is it good or bad? You might think of it as good. Service sector is growing by 7.2%. So now look at this. Agri is growing by 3.8. Secondary is growing by 6.2. Tertiary is growing by 7.2. Is secondary actually doing bad? Is secondary doing bad? Which brings another question. Which is the developing sector among the two, and which is the more developed sector? Secondary or tertiary? Which is the more developed sector? Tertiary is developed. Which is the developing? Which should be growing faster? Secondary should be growing faster. So 6.2 is not good enough, is what you are saying. It's underperformance. At this stage, secondary should be growing by 8 or 9%, not at, because already good performing sector is growing by 7.2, which means secondary should be growing it more than that. That is the logic based on which we are saying secondary is not doing well, it's underperforming. It is underperforming. Okay. Then inflation has been brought down to 4.9. Earlier I said 4.4. That's a projection for the upcoming year. 4.9, 4.8 is what we are currently, is the level of inflation that is there. Some supply side measures of the government. I already mentioned it in the economic survey, measures taken by the government, which is what is given here. Buffer stock, periodic open market release, subsidized retail sale. These are points that I've already given to you, that is given here as well. So again, a question that you might encounter from this is, if India is experiencing a persistent food inflation, which of the following measures of the government can help in curtailing it? Even without reading it, you will be able to answer it. But if there is some technical term like say price stabilization fund, you have not heard it, let's say, reading it here will help you in that. Okay, so this is how you can say budget based questions, but some of the budget based questions you can answer it just with conceptual knowledge itself, so without explicitly knowing the budget. Merchandise trade exports grew, but imports grew faster. Service exports grew. Current account deficit accounts for 1.2% of GDP. This is a number that you should not necessarily try to remember, but they won't ask you number, but they might give a statement with saying that consider the following statements about balance of payments. India's current account deficit is at an all-time high of 5% of GDP, or some statement which is very absurd, which is very wrong. If they give a statement like that, true or false, you should be able to. Or they might give a statement saying that India's current account deficit has been persistently rising over the last 5 years, declining over the last 5 years. Those kind of statements you should be in a position to answer. So having a knowledge about that would be handy, not remembering the specific number. So this is about the current account deficit, which is now moderated. Moderated means what? Reduced from 1.3 to 1.2. Okay, but they have given a quarterly data, but similar quarters are being compared. Q2 with Q2 is what they have compared. Then foreign direct investments, as I already told you, it is increasing, but not to the desired extent. So there is an increase that they are showing, but not to the, you could say, pre-pandemic levels, or not yet, not there yet. And earlier I had told you about forex reserves accounting for 11 months, that is import cover. A crucial indicator of external sector stability is 11 months. Okay, with that we can import 11 months of stuff even if we don't get a single penny more. That's the idea. Then short-term debt to foreign exchange rate decrease from 20.3 to 18.9. Earlier I said 20 to 25%. Please correct that if you can. I had said 20 to 25. That's not correct. 20 was in the past 20.3. Now it's 18.9. Which means we are doing better. The percentage of or the proportion of short-term debt that we have as a proportion of the forex reserve has come down. We are in a better position to deal with immediate debts. I'll tell you which chapter I would have told you this in. Externals, 3rd chapter. Thank you. Where I spoke about forex reserves. Chapter 3. True or false? Is the capital market of India growing? Is it penetrating more and more? Yes, no. That's all that you should know. Proof of that is number of demat accounts has grown by 33%. You don't have to remember 33. You just need to know more and more people are involving themselves in the financial market, which we again already discussed as a concept. More and more financialization is happening. Beyond a point, it might become a little risky. That's the only thing that is there. Monetary liquidity conditions is about repo rate stance and all those things. Gross NPA is at a 12-year low, where currently it is 2.6%. You know that for an individual bank, we have discussed prompt corrective action. If NPA is greater than 6% is when it becomes trouble. For the nation as a whole, banking system as a whole itself, it's only 2.6% of the total assets that is there, which is a very good sign for a bank. Growth outlook is given here, specifically with respect to fiscal policy stance. Now, previously, the government used to give, it's called as medium-term fiscal policy, right? Medium-term fiscal policy means that the government would give an idea of what is going to happen with respect to these key finance indicators, fiscal deficit, revenue deficit. They used to give a rolling target, not just for 1 year, but for a 3-year timeline. This year, upcoming 2 years also, so that there is a streamlined pathway in which the government can meet these targets. But post 2021, that is when we were supposed to meet the FRBM targets, right? By 2021, 2018, we made an amendment to meet targets by 2021. 3% of GDP should be the fiscal deficit. In FRBM, we had seen this. But COVID happened and the dynamic economic circumstances meant that the finance minister made a very bold statement saying that we are not going to give fixed targets for upcoming year. We are going to meet certain generic targets that we keep. And the target that we had kept in 2021 for 2025, 25-26 is that we should be keeping our fiscal deficit or bringing our fiscal deficit down to 4.5% of GDP. That was the target given in 2021, self-given target, not as per FRBM Act, but the government gave itself a target. But instead of giving a year-to-year target to bring it down from that level, it was around 6% at that point of time because of COVID related issues. Instead of giving a year-to-year target, they simply said, by this time we'll reach this target. And the claim of the government is that they are meeting this target because by 2025-26, the fiscal deficit is projected to be 4.4. Currently, it's 4.8 for the year which is going to end at the end of this month. It's expected to be 4.8. For the upcoming year, it is expected to be brought down to 4.4. Unless there is some major shocks, we will be succeeding in doing that, which means we have met the target. Okay, so that's something that they have given. Because of the success in doing what we have done right now with respect to fiscal consolidation, currently also the government has given itself a target to be met by 2030-31. By the end of the 16th Finance Commissions, which has not yet given its recommendations, their recommendations will last for a 5-year period, right? By the time of the end of their recommendations, the government has given itself a target. And what is the target? The target is we will have fiscal deficit to that extent, which will ensure that our public debt is not more than 50% of GDP, central government debt. So previously at least they had an explicit fiscal deficit target of 4.5% of GDP. Now they are not even having an explicit fiscal deficit target. We know something. Fiscal deficit is how much a country borrows in a year. We know what is public debt, central government debt. It's an accumulation of all the debt. The more we borrow in a year, the greater will be the public debt. The lesser we borrow in a year, the lesser will be the public debt. The government, after the recommendations of the FRBM review committee in 2016, accepted that public debt or general government debt or government debt in general is more significant than a particular year's fiscal deficit itself. Okay, so we say we are not giving particular fiscal deficit targets. We are saying by the year 2030-31, our center will come down to 50% of GDP, plus or minus 1, but 50% of GDP. Currently, what is the general government debt? Is 56.1, 57.1, projected to come down to 56.1. The FRBM review committee's target was to bring it down to 40% of GDP by 2025-26. But we are only at 56.1. I'm not talking about general government debt, I'm only talking about center's public debt. General government debt target was 60, center's public debt target was 40. But we are nowhere close to achieving that. We are at 56 because the target was given pre-COVID situation. So now we are in the current reality. We are saying our objective is to bring down the public debt to 50% of GDP by 2030-31. For that, whatever we need to borrow in a year, we'll borrow that. So anything that will ensure that by that time public debt is 50%, that is an acceptable level of fiscal deficit. So the government says this gives them more flexibility in dealing with year-to-year constraints that they are facing. It is still, we are still on the fiscal consolidation pathway, which is what is given towards the end of this document as a glide path. Path for fiscal consolidation. This is something that I would recommend you to go through. FY 26-27, which is after the end of 26. From that to 2030-31, they have given this is fiscal deficit to GDP ratio, how it has been declined. So this is again a potential prelims kind of a question. Fiscal deficit has consistently been reduced over the last 5 years, last 10 years. What is the pattern? You have to observe debt to GDP ratio. So this is only central government's debt. It was 49. Target was 40. By 25-26, we were already at 49, which meant we could have possibly met the target if not for the COVID situation that happened. But we are now at this level, and the consolidation path looking at where they, here is where they have given. The government would endeavor to keep fiscal deficit in each year such that the central government debt is on declining path to attain a debt to GDP level of about 50 plus or minus 1% of GDP by 31st March 2031. So no explicit fiscal deficit targets. Okay. Every year public debt should reduce and eventually it should come down to 50 plus or minus 1 by that year. Whatever enables this, that level of borrowing per year is okay. They have given three possibilities. If the nominal growth rate is, because everything is a percentage of GDP, right? So this is nominal growth is GDP growth rate. If the GDP growth rate is this much, what is our possibilities? GDP growth is higher and higher, what are the possibilities? And what are the three curves? The mild, moderate and high case refer to degrees of fiscal consolidation. If the degree of fiscal consolidation is very mild, the public debt is going to be 52, 51 and 50.1. If you have higher growth, we will have lesser debt because as a percentage of GDP, right? If we have very high fiscal consolidation, even with just 10% growth, we can bring it down to 49.3, 48.4, 47.5. So this is the pathway that the government has. No particular year-to-year targets. Knowing this is going to be useful in your prelims as a statement. Public debt management analysis, if there is a mains question, it might come in handy there as well. But from a prelim standpoint, how this is important is just this knowledge. This target that they have given is something that might be asked in the examination. Consider the following statements about fiscal consolidation. Okay, because they have explicitly given in the budget, it's a potential question that can be asked in the examination. Okay, so this is with respect to this. Moving to annual financials, no, not annual financial statement. I will go to budget at a glance. This is a document that I've done in class for the previous year. So I'll quickly go through what it is for the current year as well, or current budget as well. So they have given basic introduction to what is all these deficits and all those specific numbers. What is the total receipts of the country? 50.65 lakh crore. It was previously 48 point. It is now risen to 50.65 lakh crore. 50 lakh crore is what is the total receipts, total expenditure, both of them. That is the size of India's budget. Okay. Of which, rather than looking at it here, we'll look at it here. Of which, where does the money come from? Corporation tax expected to, all this is future, upcoming year. Okay, corporation tax is expected to contribute 17% of it. Income tax, including all tax, not just income tax on income alone, all sorts of income taxation on that, even capital gains tax, all of it is included. That's why there is a star. I think it includes securities transaction tax also is what they are saying. So all sorts of income, there is a whatever tax is there. So income tax 22%. Interestingly, union excise duty, which is there only on very few products, petroleum for the center. Other than that, what do they have on? That itself accounts for 5% of the total receipts that is there. Customs duty only 4%, GST and other taxes 18%, non-tax revenue receipts 9%, non-debt capital receipt very negligible 1%, and borrowings and other liabilities 24, which has actually declined from 28% rates in the previous year. Okay. None of these numbers are important. At most, you might get a question which I have not seen in a UPC question paper, but in a lot of test series they keep asking, arrange the following taxes in the order of contribution. So possibly you should know that income tax contributes more than corporate tax. There have been years where they are very close to each other, or corporate tax has contributed more than income tax. But it's not even a pure income tax concept. It's multiple taxes on various types of income which is put together. It's not a true income tax concept itself. But yeah, so if they ask a question with respect to that, you should have an idea with respect to that. More than that, look at this. From this blue area to this dark blue area, this is all revenue receipts. Tax revenue receipts. Tax alone accounts for close to 65-66% of the total receipts of the government of India. And then you include non-tax receipts, that accounts for 75% non-tax revenue receipts. So revenue receipts alone account for 75% of the receipts of the government. 25%, 24 plus 1, 25% is what is in the form of capital receipts. With expenditure, we don't have an explicit split into revenue and capital because headings are just randomly given. But we can take a look at the previous data and find out what percentage of the total expenditure is on capital account. Of 50 lakh crore, around 11 lakh crore is what is on capital account, which is about 20%. So in receipts, 25% comes in the form of capital. In expenditure, only 20% is going in the form of capital. Where is the remaining 5% going? Revenue. That is the revenue deficit component, right? Some part of the borrowing that we are using for non-productive purposes. Okay, ideally, if 25% we are getting as capital receipts, all 25 should be spent on capital purposes. That is not what is happening. This is where the concept of grants in aid for creation of assets comes into the picture, which is effectively a capital expenditure, which is the concept. Effective capital expenditure is 13 plus 12. If you account both of them, that accounts for about 15. 15 out of is close to 30%. 15 out of 50 is roughly 30%, right? So we are getting only 25% in the form of capital receipts, but we are spending 30% in the form of capital expenditure, including the grants in aid for creation of capital assets, which means we are very, very effective with respect to that money. The picture itself changes when you add the grants in aid for creation of capital assets. And it is not just a mechanism to hide numbers or manipulate numbers. It is very true because the center is giving that money, insisting that it should be used for creating assets. So they can claim that it is capital creating in nature, although they cannot explicitly add it as capital expenditure. That's why the term effective capital expenditure. This shows a positive sign on the part of the government, their focus on capital expenditure, which is further shown when you go further down into analysis of capital expenditures. This is receipt, composition of expenditure, revenue account and effective capital expenditure, trends in capital expenditure. This is an absolute lack of crores, especially the post-pandemic period. There has been a substantial increase in capital expenditure. This is something the survey has highlighted as well in the chapter on investments, that the government is spending significant or focusing significantly on capital expenditures. Okay, so which is reflected in this graph. These kind of graphs become very important for the prelims examination. This shows a 10-year trend. Over the last decade, the government has consistently increased its expenditure or persistently increased its expenditure, capital expenditure. True or false? False, because there are years where it is flat. But over the last 5 years, it has consistently increased. True. Last 5 years, it has consistently increased. So these kind of analysis becomes very important. Similarly, with respect to your fiscal deficit concept, I already showed that somewhere else, but it is here as well. The various 4 deficit trends. Post the COVID period, over the last 5 years, everything has been showing a declining trend. All deficits have shown a declining trend. Again, this is an observation. You look at this, the line that you write is over the last 5 years, it has consistently declined. Over the last decade, it has shown inconsistent trend. That's the observation that we make out of this. Another such similar important thing is trends in tax receipts. Tax as a percentage of GDP. So 2 types of observations. Tax as a percentage of GDP has remained fairly constant over the last decade. True or false? Don't be misled by this. Over the last decade, 11%, 12% is fairly consistent, fairly constant. You leave the, which is why I'm using a very generic word like fairly constant. Has remained completely unaltered. They won't even ask. If they ask that, then it becomes wrong. Has increased drastically? No. So this is one type of question, tax to GDP ratio itself. And the other type of question is, over the last 5 years, direct tax has contributed significantly more than indirect tax in the overall tax collections. Over the last 5 years, direct tax 6 to 5.5, 6.2 to 5.1, 6.6 to 5.1, 6.9 to 4.9, 7.1 to 4.9. It is showing a trend. Is this a good sign or a bad sign in an economy? More direct taxes is a good sign or a bad sign? It's a good sign, because indirect taxes we say is inherently or effectively regressive, because people end up paying the same amount of tax, the lower income person gets affected more. So it's a positive sign. The finance minister herself has come out and said this. If more people start paying direct taxes, we can reduce the burden of GST on people. Okay? Okay. Yeah, it will happen. Okay, wow. Okay. So I think, yeah, with respect to analysis, that is what we have with respect to the budget document. Of course, as I told you previously in class itself, there is a entire set of major schemes, outlay on major schemes. Look at the 5-digit, 6-digit expenditures, focus on those schemes, about 15 to 20 schemes. That goes with what I have mentioned in class itself. Okay, so that was the budget analysis itself. Documents, should I share whatever I used in class? Madam, you don't want? Okay, no problem. This document with all the headings I can share with you if you want. This document I cannot share, I don't have the right to share. You can download it from the budget website itself. Okay, so we'll wind up our class with this. Hopefully it was useful. Let me know if you have any further questions with respect to this. Thank you. I'll quickly take a look at online. Okay, people online, is there any particular question that you would like to ask? I'll address it. Anything that you asked in the past which I did not address, I can take it up now. Welcome, Bhavna. Just give me a moment. Shoma Mukherjee, what do you want me to explain? I missed your question. I only see a message which says sir and it says can you please explain. Which one? Did you ask a question in the past which I missed? Thank you. Means related for budget, economic survey, that's it. That is where your mains significance is. And all the schemes that we discussed, right? So, features of that scheme. But learn it from a more generic perspective in the sense, list of all the schemes which will help in financial inclusion, list of all the schemes which will help in, say, social infrastructure building. Use these schemes as an example to enhance your answer. So I would say survey in that sense is more relevant from the mains perspective. Sir, will this data and concept change every year? Concepts may not, but the data will change every year, definitely. Shoma, can you give complete sentences rather than sending one word at a time? So I'm not able to understand what you're asking. Most important concept. Sorry. I don't set the question paper, so I don't know. I think whatever I discussed in class today were only the most important things, because we didn't have time for anything else. Everything I discussed today over the 3 hours, 3.5 hours, I think is important. If it is not important, I would not have touched it. In fact, I can't even say I addressed all the important areas. So important, among important ones are the ones that what I felt is what I focused on. Apart from the Hindu newspaper and the sources you said today, what else should we source from? No, nothing else. If you are a regular reader of newspaper and the sources that I said today, which I don't know or what, that is enough. Shoma, it is based on my experience that I have shortlisted this. You cannot expect me to give you a list of, let's say, 5 topics and say you will get a question from this. It's just not how UPSC exam works. So everything that I discussed over the 3.5 hours is important, and more are important. So it's a vast area, economics. So I've tried to shorten it into a short span of time. All right. Welcome, Abhimanyu. All right then. I don't see any further questions from online. I think we'll end the session then. Thank you so much. Is referring to government websites you showed today. Oh, okay, yeah. Okay, Lavit. Yes, correct. Budget website, yes, primarily. Thank you. Huh? Cut.